incredible anguish because we failed.
Senator, I agree, and we feel
so. Let's get to the question. And look, I can pivot with the best of them. I know how to pivot. I know when people are pivoting. You're pivoting. Tell me if you would support having the FAA do the certification.
Senator, we believe that delegated authority process that we have today has contributed to improved safety over the last 2 decades.
Okay.
As I mentioned earlier, we are open to improving it, but the idea that we can tap the deep technical expertise of our companies across the aerospace industry is a valuable part of the certification process. But the FAA is the certification authority and should be and should continue to be.
Well, but they really aren't. The truth is you can say that they have the ultimate responsibility, but the truth is if the issues aren't flagged by the ODA, by your people doing the certification, the FAA never does it because, quite frankly, it would cost some more money to have the FAA do the certification. And by the way, it's cost you money, so we could charge you for that certification to help pay for it, so it would have no reflection on the taxpayers. So the question becomes, I'm going to tell you what, when the FAA says you didn't need to do this and you come in and say, no, you don't need to do this, it's fine if nothing happens. But when 350 people die, we got a problem. And you bring up the point that Senator Cruz brought up, that there was plenty of information out there on this and nothing was done. And so the whole thing about it, when it comes to safety, time and money are no object, is not, the record certainly doesn't show that.
Senator, I understand your points and criticism, and I think it's true that we operate in a very competitive world. We are the only large commercial airplane maker left in the United States. We do have competitive pressures around the world, but I can also tell you that never takes precedence over safety.
But
our business model saves airplanes.
I think it absolutely could be argued that it did in this case, and I heard Senator Duckworth's questions, and Boeing has had an incredibly valuable name. But I've got to tell you, and I think I told you guys this in office some time ago, I would walk before I was to get on a 737 MAX. I would walk. There's no way. And the question becomes, when issues like this happen, it costs your company huge. And so you shouldn't be cutting corners, and I see corners being cut, and this committee is going to have to do something to stop that from happening. Thank you, Mr. Chairman.
Thank you, Senator Tester. I'm going to ask that Mr. Mullenberg answer on the record his opinion of the current ODA system, whether it should be modified, and answer to Senator Tester's question. Senator Johnson.
Thank you, Mr. Chairman. Let me add my condolences to the surviving family members and friends of the victims of these tragedies. Mr. Muhlenberg, among many failures, it strikes me there are 2 primary failures. First and foremost, in the original design and certification process, and then secondly, in the reaction after the first crash. So let's concentrate on those 2 things. Tell me if I'm getting this right. The 737, very successful airframe, new, more fuel-efficient engines were available, and so you wanted to include that in an upgrade of that airframe, correct?
New fuel-efficient engines and some other enhancements.
And those fuel-efficient engines create a different aerodynamic for that aircraft, correct?
That's correct.
Is the MCAS system, is that a standard type of automatic pilot type of software system on planes? Is that pretty standard to have something like that?
Senator, the MCAS system that we have on the MAX is unique to that airplane.
So it was put in there specifically because you added a different type of engine to a known successful airframe, which made that less stable and required some kind of, as you called it, a runaway stabilizing system.
Senator, if I can clarify that, the 737 family has a system called the Speed Trim System, and the MCAS is an extension of that system that's unique for the MAX. But
again, unique because of that added engine design.
We tailor the software of each one of our airplanes so that they optimize the handling qualities for the unique airplane configuration.
But again, going into the introduction of this 737 MAX, you realize that airframe was changed because of those engines and required this MCAS system for stabilization.
Yep, that was one of the additions we made to create the handling qualities we wanted for the pilots. We also made some changes to things like the vortex generators on the wing. So it's an integrated solution to create.
But again, you were well aware that this design change created something that required an MCAS system. So now fast forward, you have the Lion Air tragedy. According to Senator Cruz, the email that he sent up there, which I believe was written on November 15, 2016, just a couple weeks after that Lion Air crash, there are people, it sure appears in Boeing, that knew exactly or certainly suspected what went wrong because they integrated in the design. You had an MCAS system to take care of this eventuality in the flight characteristic, correct?
Senator, again, I'm not exactly sure what was meant by that email traffic, but I can tell you in that time frame.
It seems pretty obvious, doesn't it? I mean, doesn't it seem pretty obvious? I mean, you are you are engineers. You understand how this was designed. You understood you need an MCAS system to make up for that instability, and then something happened. Pretty well, I would think, diagnosed pretty fast. I mean, again, I'm reading these things. I'm not a pilot. I'm not an aerospace engineer. And yet I'm scratching my head going, whoa, something really wrong happened. You know a whole lot. Why didn't you react faster?
Well, Senator, completely separate from that email traffic and what it might mean, our team very quickly after the Lion Air accident assembled with the regulators. We evaluated the data from the accident. We saw that MCAS was involved. And so we began to take quick action immediately. It doesn't have to do with that email. That's not relevant to that discussion. Our team was immediately identifying that.
Which is exactly my point. The fact that it took another tragedy to actually ground the airplane so you could actually have a true a fix that worked is, I think, really what's on the table here. And the diagnosis is why didn't we react? Why didn't we ground that aircraft a lot sooner so that another tragedy wouldn't happen?
And Senator, we have asked that question over and over. And if we knew everything back then that we know now, we would have made a different decision. The decision that was made on that at that point with the data we had, we quickly convened a safety review board. The FAA, coming out of that, confirmed the continuing airworthiness of the airplane and issued that officially. That was the safety case that was built. But Senator, as you point out, we've learned from the second accident, and if we could go back, we would have made a different decision. And we have learned. We are making those improvements to MCAS, and that's where our focus is going forward.
Well, Boeing is an important company. It's important for our economy. I want to see you get this right, but you have to properly diagnose this. You have to accept responsibility for what happened, so we actually can make those changes, both within Boeing, also within the FAA. Thank you, Mr. Chairman.
Thank you, Senator Johnson. Senator Rosen.
Thank you, and I want to thank all the families that are here today who have lost their most precious loved ones. Their deaths should not be in vain, and we all have to do every bit of our part together to make sure that we prevent future tragedies from happening, and in order to honor the memories of these 346 souls and the empty chairs that they will leave behind this Thanksgiving and Christmas and on and on and on. And so you said additional information wasn't available. I want to touch a little bit on MCAS and Brazil. According to news reports, when the Brazilian National Civil Aviation Agency came to the U.S. in 2017 to test out the MAX 8, they determined that changes made to the old 737 were significant enough that they needed much more information from Boeing and were going to provide it for their pilots. When they eventually published their pilot training requirements, they were therefore able to flag the MCAS as one of the changes the pilots needed to take into consideration when flying the MAX 8. And yet, for United States pilots, MCAS wasn't mentioned in their manual. So, Mr. Mullenberg, why was this information not flagged for your other customers who had 737 MAXs in their fleet? Did you prevent your company from sharing these differences to other regulatory bodies or operators? I have here the Brazilian manual. They decided their pilots should learn this. And why wouldn't you provide it to the United States pilots?
Senator, I can't comment on the details of the Brazilian document. John may be able to, but let me more broadly make the point that that's exactly how the process is supposed to work. We provide information. We evaluate with the regulators in the various jurisdictions what should be included in the training. We have no desire to hide features of the airplane that pilots need to know about.
They reported back to you, and it was significant enough for them to put this in their manual. Then why wouldn't you consider that it was a significant change?
Yeah, and Senator, I understand your point, and that was a decision that was made in Brazil. Again, I'm not familiar with the details of that one, but the discussion.
Let me just ask you this question then. Moving forward, will you commit to making it a practice when other countries are clearly paying attention enough to make significant changes to their pilot manuals based on major operational changes, that Boeing will send these notifications of changes to the other users of these aircraft so at least they have the opportunity to train their pilots? You denied them the opportunity, sir.
Senator, we are committed to sharing that information, and that's part of our international collaboration. But I also want to note again that the discussion around MCAS training and whether it would be included in the training manuals, that was an active, iterative discussion with the FAA, and it was a decision made based on safety. Again, we try to put information in the training manuals that focuses on the effects of failures and things that will be valuable to the pilots. And it's not always the case that more information adds to safety, although in this case, we understand this, and this is one of the additions going forward.
Brazil thought it added to their safety. But I want to touch a little bit on Senator Fisher, the question that she raised earlier. All these changes have taken place, of course, over the years, and this plane is still working off its original certification from 1967. This is despite the fact that pilots have told me that the MAX 8 is in no way functionally similar to the original 737s that took to the skies 52 years ago. I said in the last hearing that we had, it seems to me like there have been so many significant modifications, it's almost as if you took a canoe and turned it into a cruise ship. So, Mr. Hamilton, can you tell us how many derivative certificates Boeing has received for the 737 since initially being certified over 50 years ago?
Senator, I don't have the exact number in my head. It's approximately, I think, 14. But
14 or 814? I'm sorry, I didn't
14 derivatives.
14 derivatives.
Yeah, but let me take the action to follow up with you on that and get you.
Thank you. I appreciate that. And the last thing I'm going to ask, do you believe that the 737 MAX is functionally the same plane that was certified in 1967?
Senator, as I mentioned to the earlier senator, the safety standards have evolved as the airplane has evolved. And one of the important things I think to understand is what's really important also is for the pilots as they transition from an earlier version of the 737 to the newer version, that the airplane behaves and handles in the same way. That was important from a handling characteristic standpoint. And
important enough for Brazil to mention, but not for us.
With respect to that, Senator, so there is a joint operation evaluation board that determines the training, but other regulators can determine what training they want to do above and beyond based on their information. I don't know the specifics of the Brazilian document that you're referencing. We can follow up on that.
Thank you. Thank you, Senator Rosen. Senator Blunt.
Thank you, Chairman. So, Mr. Muhlenberg, I don't want to absolve you from both the opportunity and the responsibility to go back and look at that long question from Senator Tester and answer it for the record. But for now, one of the central thoughts in that question was, why shouldn't we change this process and go back to where it's no longer cooperative, where the FAA takes full responsibility? Give me the answer to that. Should this process be changed where the federal government is fully responsible with employees only hired by the federal government? What impact would that have on safety, do you think?
Senator, I believe the data clearly shows that creation of the delegated authority process and its implementation has enhanced safety over the last couple of decades. I mentioned earlier about a 95% improvement in aviation safety over the last couple of decades. I think a portion of that at least can be attributed to the delegated authority process. That doesn't mean we shouldn't refine it, reform it over time, but the fundamental process of strong government oversight combined with deep industry technical knowledge in the right balance is a strong safety process. And I firmly believe that's one of the things that's contributed to aviation safety. And that process demands oversight, and we are fully supportive of strong oversight, but we also fully support the idea of tapping deep industry technical expertise, and that combination is the safest combination.
And what do you think the view of the industry technicians is of their responsibility there? Do you think they feel the right level of both responsibility and liability of providing the information that they need to provide?
Senator, they do. And I can tell you that's the culture of our company. And I respect the comments that were made today and the questions that have been raised about our culture. We deserve the scrutiny. But I've been at this company for 34 years. I know the people of Boeing. You all know the people of Boeing. These are 150,000 people that every day come to work because they have an important mission. They are honest. They are resolute in their efforts. They are committed to safety. That's our culture. And every employee at Boeing, that's just how we think about the work we do. And we're going to continue to improve as a company. I'm not saying we've done everything right. As I've noted today, we've gotten some things wrong. But this is a great company with a great legacy that's committed to excellence. And where we can improve, we will. Where we can learn, we will. But our culture is about safety. That is at the very core of Boeing. It's been that way for 103 years.
All right, Mr. Hamilton, on the, I had 2 or 3 questions that actually Senator Rosen just asked, pursuing that further. But on, you've got a 1967 certification that's had 14 variants since 1967. You have a significantly different plane, just based on the 14th variant of the original plane. What difference do you think it would have made if the certification process would have gone back to we're certifying a new plane? Would that have made a difference in the MCAS system? Or you've been doing this a long time. What difference would it have made if we hadn't built on the previous half century of this plane's history and just had started with a new plane? Would that have been better or worse?
In Part 21 of the federal regulations, it spells out the change product rule, which is how you assess for a derivative type certification. And it's a process it's in the USFA's regulations. It's also in European and other countries' regulations. And it requires you to look at all significant changes and step up. I think there's an assumption here that a derivative type cert is less robust than a new type cert. I think when you look at a new type cert, you oftentimes have some exceptions or equivalent levels of safety very similar to what you see on a derivative. So I'm not sure it would have necessarily resulted in a safer airplane. It might have driven some different design decisions, though. But fundamentally, one of the things that happened in these 2 accidents was this assumption around how we expected crews to respond under certain situations, which proved to be it did not happen. And I think that's a fundamental issue that we have to address as an industry.
Thank you, Mr. Chairman.
Thank you, Senator Blunt. Senator Blackburn.
Thank you, Mr. Chairman. Thank you for being here today and for taking our questions. I will tell you this, as you've responded, you've addressed senator. I think you should be addressing victims, because they're the ones we're asking questions on behalf of. Yep. And they're the ones who have come today on behalf of their family members. Another thing I want to ask you, you've mentioned a couple of times a lack of awareness of emails or documents or communications. And, you know, Mr. Muhlenberg, we have something around here before we vote. We say we read the bill so that we know what's in it. And if we need to ask questions, we ask questions. And we develop that awareness that is so necessary to make good decisions and to have a full view of the situation that is in front of us. And it is disconcerting to hear someone who's to be the leader of a company to say, I wasn't aware, or I didn't know, or hadn't read that. Nobody made me aware of that. I depended on that. You know, we call that passing the buck, and it is your responsibility if you're going to lead the company to have that awareness. So have you at this point read each and every page of every document that is relative to the situation in this case?
Senator, I can't say I've read every document, every page. I know we've provided more than 500,000 pages of documents as part of the production process over the last year. I accept your input and your criticism. I am accountable. Our company's accountable. Accountability starts with me.
I appreciate that, but I think that it is unsettling to hear you say, I haven't read that. Let me move on. I do believe you're in the business of safety as a priority. And even though you say you don't sell safety, let's talk a little bit about the simulators, because you had pilots that were training in the simulators as well as training in flight, correct?
You're referring during the MAX development?
Yes.
Senator? Yes.
Yes. Okay, so the simulators that were being used for training, were they built by the same engineers with the same components, the same sensors, the same systems as the MAX system?
Senator, we have a wide variety of simulators, some of which are what we call conformed simulators, which represent the actual hardware and software of the airplane. We have others that are engineering simulators.
That some of the pilots were not training on this specific simulator. And then you also, you know, Mr. Peters had started down a line of questioning with you about the pilots and the pilots that were trained, and you only had highly experienced pilots in simulators before flying the new MAX system, correct?
Senator, I was referring to our Boeing test pilots. We also have pilots from a number of other organizations, regulators, and airlines.
Why would you not choose pilots with a variety of experience, a wide range of experience? Because there are pilots with a wide range of experience that are going to be in that cockpit, flying that plane in real time.
Senator, I agree with your view on the necessity of having a variety of pilot experiences involved in the testing process. But again, our Boeing pilots are not the only testers in the process.
Okay, well then let's take it this way. What changes are you going to make in the simulators and in the training that is going to bring to account for human factor?
Senator, we've made several changes and have more to come. But to start, the baseline training program for the MAX is roughly a 24-day training program, which includes heavy use of simulators, advanced simulators. We've also modified the computer-based training for the incremental training between the NG and the MAX. We've added visibility to the training materials for the MCAS system that we've talked about. That new training is all currently being evaluated and will be ultimately certified by the regulators to make it a baseline in the program. We're also investing R&D significantly in advanced simulation.
Let me ask you this. I appreciate all of that and appreciate your answer. Prior to these occurrences, did you feel that your training was not sufficient?
Senator, no, we implemented the training that was planned and certified for the airplane.
Okay. Yield back.
Thank you, Senator Blackburn. Senator Scott.
Thank you, Mr. Chairman. First off, my heart goes out to all the families. I just can't imagine, the impact on these families after these tragic accidents. Florida, I come from Florida, so air travel is pretty big deal for us. 126 million people traveled to Florida's tourists last year, and a lion's share of them came by aircraft. So the safety of everybody is really important. Mr. Muhlenberg, the president and CEO of your commercial airlines was let go after this. What's your process to hold people accountable to make sure this doesn't happen again?
Yeah. Senator, first of all, my company and I are accountable. I believe that accountability starts with me. My board took some recent actions regarding my position, which I fully support, and will allow me to focus even more on safety. So every action we take is try to focus on safety. I have also taken some management actions. Again, those are focused on operational excellence and safety going forward. As other reviews are completed, if we see additional actions that need to be taken, we won't hesitate. But in some cases, accountability also includes improvements to our processes and our organization structure. And that gets to some of the changes we announced on our safety review boards, our new safety organization, our new board safety committee, and the realignment of all 50,000 of our engineers to our chief engineer in terms of reporting structure. All of those accountability actions are important, and all of them are focused on safety.
So if any of your, whether it's engineers or non-engineers, if somebody has a concern in the future about safety, what's the process you've created to make sure that it gets to you and you can react to it? Because ultimately, as a CEO, the buck stops with you.
Yeah, Senator, that's been one of the key learnings from this whole process. Is we need to elevate the visibility on safety issues that might come up at the ground floor level. Make sure they get the right visibility and action. So a couple of things we've done there. One is, again, restructuring our safety review boards. So I now get a weekly update on safety review boards from across the Boeing enterprise at a detailed level, which I've found to be very helpful. We've also, with the stand-up of our new safety organization under Beth Pastor, instead of having those safety teams underneath our businesses, they're now separated and report up to our chief engineer. Any safety concerns that employees have will come through that organization. We set up a new anonymous reporting system for those employees that might want to make anonymous reports to facilitate that. And we continue to have a full range of ethics hotlines across our enterprise that encourage employees to make their inputs. And we have a culture of asking our employees to speak up. We want them to speak up. We want to make sure they're heard and that we take action.
Have you made any changes at the board level that to increase the accountability for all employees?
Yeah. Well, Senator, our board has been very engaged in this entire process. One of the things we did is now about 6 months ago, I asked our board to set up a independent review led by Admiral Giambastiani. He has tremendous safety background. That committee came forward with a number of recommendations, some of which I mentioned in things that we've implemented. Our board will continue to be engaged in that process. And this new safety organization that I talked about, in addition to reporting to the chief engineer and to me, it also provides independent audit, if you will, back into our board. And our board has set up a new aerospace safety committee that's now permanent, headed up by Admiral Giambastiani. As you might have seen on Friday, we added another board member, Admiral Richardson, who also has deep experience in safety. He will also be a member of that committee. And so our safety organization will have an independent reporting line to them as well, which I think is a good disciplined process.
I had to go preside, so I didn't get to hear all the testimony, but have you made any recommendations to this committee at things that at the federal level we ought to be doing differently to make sure whether it's Boeing or Airbus or anybody else, this doesn't happen again?
Senator, we've discussed a number of options there. Again, we have learned, and there are some things that we need to fix that are related to the airplane design and training and communications. We also think there are some opportunities to reform our processes and how we work together as a government and industry. And we're very supportive of any actions there that would enhance safety.
Thank you.
Thank you, Senator Scott. Senator Sullivan.
Thank you, Mr. Chairman. And I also want to express my sympathies and condolences to the family members here. We have a safe commercial aviation industry in America, but I think we always have to look at ways to improve it. Industry, the airlines, FAA, Congress. So I'm sure it's difficult for the family members to be here, but it's important that you're here. So I want to thank you for that. I'm going to start with just a bit of a kind of a parochial question. Mr. Mullenberger, Mr. Hamilton, Alaska Airlines is my state's airline. It's a very good airline. It's certainly critically important to my state. I know it is to the ranking member's state as well. They fly almost all 737 Boeings. We Alaskans travel a lot. I've had many constituents in the aftermath of these MAX crashes that have asked me, are the 737s that we are flying on all the time in Alaska to and from Seattle and other places safe? So can both of you assure my constituents that these 737s are safe, that are such an important component of the Alaska air travel?
Yes, Senator, the 737 NG fleet that Alaska operates is a safe fleet. It's a safe airplane, and it's got about 200 million hours of air safety track record behind it.
Mr. Hamilton?
Yeah, I agree with Mr. Muhlenberg's comments. I also just want to state that we have a weekly meeting that we review all the reports that are coming in from the fleet on whether or not they are a potential safety issue or not.
So the MAX issues that we're focused on here with regard to 737s are not issues that exist with your other line of 737s, 800s, 900s?
No.
That's correct.
Let me ask, and I know the House side was looking at this issue as we focus, as this committee is, on the tragic lessons learned from the MAX 737 accidents. Should we also take the time to ensure that the other 737 models that are receiving less attention now are nevertheless continue to be safe, and to take the opportunity to look at the FAA certification process on those to make sure that that is not bedeviled with some of the challenges that we are discussing here with regard to the MAX? Would you agree that that's an opportunity to not just focus on the MAX, but the overall process to reboot the focus, both at your company but also in the FAA, on safety?
Senator, I believe there are a number of independent reviews underway right now looking at that broader certification process. Some of which have begun to report out. We support that broader look.
So models that aren't just the MAX?
All models. So we are taking an end-to-end comprehensive look at the certification process, and I believe there are a number of government independent reviews that are focused on that.
Let me ask for both of you. I keep hearing from safety experts about the importance of what they refer to as functional safety, and that is the way that different systems work together with the operator, as opposed to looking at each system as it's added to a new model in a vacuum. And it seems to me that this issue of functional safety is a core issue as it relates to the MAX, given what has happened. Can you tell the committee about what your company's approach to this issue of functional safety is when adding new systems to an existing aircraft like the 737? Obviously, there was a failure here on that issue. How are you working to improve that? And does the FAA do enough to focus on this idea of functional safety, not just the individual additions to existing and older models?
I'll ask John to take that question.
Yeah, so Senator, I think it starts with our requirements breakdown of what's our airplane level requirements, system level requirements, component level requirements, and then validating at the component level, the system level, and at the airplane level, how any change met the requirements and interacted across at the system or airplane level. You also talked about regulatory requirements.
Yes.
There's something called...
Does the FAA focus enough, you think, on functional safety?
So there's been some rather recent changes in what we call development assurance that I think is continuing to mature. And again, this looks at the functional safety, and some of the things that you're really focused at is the breakdown of requirements and how different systems interact with that. So I think we, as Mr. Muhlenberg pointed out, some of the recent industry committee reports have discussed this, and I think we'll support those recommendations and the FAA's actions going forward.
Thank you. Thank you, Mr. Chairman.
Thank you, Senator Sullivan, and thank you to the panel. We appreciate you being with us, and I'm sure we'll be questioning you further as we continue to get more reports. Our second panel of witnesses will be escorted in now. We thank you two gentlemen for being with us.
Hey, welcome to the Halftime Report. I'm Scott Wapner. You've been watching Boeing CEO Dennis Muhlenberg testifying before the Senate Commerce Committee 1 year to the day that a Lion Air flight crashed in Indonesia, killing all 189 people on board, the first of two deadly crashes involving the 737 MAX jet. Mr. Muhlenberg began by addressing families of the victims, telling them, quote, "We are deeply sorry. We will never forget the victims," and also admitting that mistakes were made in the process of making sure those planes were safe to fly. Our Phil LeBeau live on the Hill watching all of this today. Phil?
Scott, I would give Dennis Muhlenberg a C. If somebody said grade his performance today, the first half he did not get a whole lot of really tough questions, but that changed in the second half of the hearing. And when a number of senators said, look, you're the CEO, the buck stops with you. How could this happen? Here's a taste of some of the questioning and commentary he heard from the senators.
You should take, offense to the fact that people say it's a great company not being run correctly. So for the 346 people who trusted Boeing without a second thought, we need to get this right.
Boeing came to my office shortly after these crashes and said they were the result of pilot error. Those pilots never had a chance. These loved ones never had a chance. They were in flying coffins.
And that's just a taste of some of the comments that we heard from the senators who were questioning Dennis Muhlenberg today. Guys, time and again, Dennis Muhlenberg came back to basically the same theme that we've heard from Boeing for the last year. We have a culture of safety. Yes, mistakes were made. We're going to correct those mistakes. There were a lot of questions regarding the FAA and the certification process that got a little bit into the weeds about how this could happen. You can bet there are going to be tough questions for the FAA when it comes to that issue. But with regard to Boeing and how Dennis Muhlenberg did today, I would say he did average at best, Scott, because the last hour was really bruising on him.
The question with that, Phil, if that's your assessment, and I've heard some describing today as a second job interview of sorts for Dennis Muhlenberg, can he keep his job performing average at best?
Well, I said this earlier today after we asked him that question. Should you stay on as CEO of Boeing? I do not think that they are going to make a change in the CEO position while they're trying to, A, get this plane certified by the end of the year and then convince the airlines it's safe to fly. I mean, you're looking at a process that's going to go at least well into February or March before it kind of settles down. Then maybe the board might look at, is Dennis Muhlenberg the right person to run this company? And as I said this morning, Scott, I have no indication that they are looking to replace him, but it's pretty clear that, the questions that he got today and what you're hearing, what others are hearing, that has to be front and center for the board of directors. Is he the right person to lead this company?
All right, Phil, we appreciate it. We'll talk to you soon. That's Phil LeBeau on the Hill for us. On set with us today, Joe Terranova, Stephanie Link, Josh Brown, Pete Najarian, and Canaccord Genuity's Tony Dwyer, Steph, I turn to you first. The only one on the desk today who owns Boeing shares. What do you think about what you heard today?
Well, obviously it's a tragedy, and it's going to take a while to get through this whole process. But I do think that they are making progress from a business point of view, from a stock point of view. They are doing a lot of test hours, 1,500 test hours, 800 flights. And when they get this plane back into production, that's when the free cash flow story really starts. And that means I think they can do $31 a share in free cash flow generation from 2020 to 2022. So from a financial point of view, I'm holding on to it because I do think the long-term story is okay. They have to get this plane, though, in the air, and they have to get out of the newspapers on an everyday basis for this stock to really take off.
I'm going to ask you a question that you may not want to answer, but I'm going to ask it anyway. Because sometimes when you own a stock, one of the reasons you give for owning it is the person who's leading that company. And I think of Larry Culp as one of those examples with General Electric and the reason you believe in that story. Do you believe that Dennis Muhlenberg should remain CEO?
Through this transition, absolutely. The last thing this company needs is to have an interim CEO. I do like that they separated the chairmanship role from the CEO role. That's a good thing. So at least he can focus all of his efforts on fixing this and getting this plane back in production. Afterwards, I don't know. I actually don't give him a C. I didn't give him a C. I give him a B. I really think it's tough to go in front of Congress, right, with all these questions. And they're firing, and they have right to do so. But I mean, it's a tough, you're in a kind of a lose-lose situation, I think.
Yeah, some would say maybe he brought that on himself by his actions from the time of these crashes until today. It wasn't exactly the most forthcoming or public CEO that we've seen in an instance where maybe he should have been.
I think in the beginning he didn't do a good job. I think you're right on that. But I think over the last quarter or two, I think he actually has. And in fact, I thought he did a pretty decent job on this last conference call when they reported earnings in terms of giving more information and being more forthcoming and being more humble, right? So obviously he should have done it earlier on, but he's doing it now. Let's get this job done. Let's fix it and let's move on.
Okay, so the remarkable thing about this story from an investment standpoint is the fact that shares are up year to date. You could easily see an instance where, given all that's gone on around this company, the crashes, the terrible tragedy around that is one thing. The other part of this story, the what did they know and when did they know it sort of thing, you could easily see this from a stock perspective being destructive, and it hasn't been as much as you may think. But yet nobody owns the stock other than Steph, and I'm wondering why.
Well, Steph, I think, has much more of a longer-term perspective in her investments, and I think it aligns correctly here with Boeing because this is a free cash flow generation story, and that will return once again. There will be delays. Will there be a response, a legislative response to what we're hearing today? Will there be fixes that will be mandated from Congress, from the Senate? That'll delay the process, and that potentially pushes outside of the fourth quarter the return. I do think this does come down to, do people get on the plane and fly on that plane once again? Do they feel comfort in flying on the 737 MAX? I don't know the answer to that. I suspect the answer will be yes. But I think that you're owning this stock because of the free cash flow generation. I also think the result of this has a much broader regulatory response, and that's going to be, in certain instances, the lifting of regulation may not be such a good thing. We've loosened regulation dramatically in the aviation industry. We've taken away funding from oversight agencies, and I think it's proper after this to ask if that was the right direction to go and if we should be reversing that.
Josh.
Everyone who's been in this business more than 15 minutes knows you buy the congressional hearings. You don't sell the congressional hearings. There's nothing left to be said about the situation. We all agree it's a tragedy. We all agree it's going to cost them a lot of money. We all agree it's a stain on their reputation, et cetera, et cetera, et cetera. You buy when they're in front of Congress.
The other issue is what we heard from Gary Kelly of Southwest last week.
About the potential
raising the issue about switching suppliers, maybe not all together, but at least bringing somebody else into the fold as well.
Like who?
What he was talking about, the idea of maybe flipping over to Airbus. But the problem there,
that'll take 10 years.
Agreed. And that was what John's point when he was arguing back and forth last week with Phil was, hey, look, do you know what the backlog is there? It's absolutely extraordinary. So it sounds great. It sounds like, hey, we're doing all the right thing. But how do you actually implement that? And I think that's the difficulty. I think getting back to Boeing, though, once they can get through all of this, Scott, and obviously it's still going to take a little bit more time, but this is a name, and Steph's been great holding into this. When you really look at it, it's been banging around between a fairly tight range now for a while. Now, I kept thinking it was going to break back down to last year's December lows. Never happened. But this is a stock that we all know going forward, yeah, free cash flow, all the different storylines that we all know are going to get out there. And the real thing becomes, what do they do about China in the future? That is something big for them, and obviously that will be, is he still going to be the right CEO for the job when it comes to those decisions?
Okay, let's get a check on the markets if we could. S&P hitting an all-time high for the second day in a row. As you know, it's a huge week between earnings and the Fed meeting, which begins today. We have Canaccord Genuity's Tony Dwyer with us at the table as well. All right, so we've hit new highs this week. Earnings better than expected. Is that fair to say?
Earnings are a little bit, revenues are better than expected.
So where do we go from here?
So Scott, it's interesting. You know, a month ago, at the beginning of this month, it looked like all was lost. We were about to go into a negative earnings report. We had a hard Brexit
which we did
on the horizon.
Earnings have been negative, right? Earnings growth is negative. Let's not say it's something it's not.
But it's hard to make the case that you have a negative earnings environment when top line growth is positive, especially ex energy. Typically, if it's buybacks and all the financial engineering people like to talk about, if that was the negative, Scott, top line growth wouldn't be up. Where you really want to be worried about we believe that we're coming out of the third mini recession of this cycle. Similar to the post-2011-2012 European debt crisis, similar to the Asian commodity crisis of 2015 and 16. And in both of those occurrences, the S&P made a low months before the 10-year did. Defensive stocks led into the 10-year low, which so far is September 3rd, and then it was offense. So we're on offense. Our target is 33.50
for 20
in the first half of 20.
Are we pulling some of that forward the higher we go into the end of this year?
You could be. You could. It's been listen, it is stunning to me. It blows me away that the Barron's Big Money poll has never been below 38% bulls. It's at 27% bulls.
We mentioned that yesterday on this program.
It's extraordinary. The only times that you got to 38%, according to Jason Goldford at Sentiment Trader, 1999, 2005, and 2016. You were up 6 and 12 months later for all three. It just blows me away.
So how do you get that sentiment, that this negativity, to shift and push closer to your target?
There's only one answer to that question.
Everyone's sentiment improves when price goes up. Everyone's sentiment deteriorates when price goes down. I want to point out a couple of things that I think are important here. A lot of the things that we were worried about have now resolved themselves to the upside. And I'm not talking about headlines. I'm talking about sectors in the market. Let's look at regional banks. They are now at the highest level since August. Notable. This is where credit flows to small businesses and regular people. These aren't Wall Street banks. But let's look at Wall Street banks as well. XLF, breakout, new 52-week high, phenomenal, highest level since September 2018, up 30% off the December low. Notable. Now let's turn to industrials. We're all worried about manufacturing recession, et cetera. The industrials are right at the peak of this horizontal resistance they've been sitting below all this time. That could be a monster breakout to new highs. Look at some of these names individually. It's already happening. 10s minus 2s. In August, we had the yield curve invert momentarily, but still it did. That's been steepening ever since. We're now at 20 bips. What else do you want? Yesterday, you had very quietly Google make a new 52-week high. Apple has added $90 billion in market cap in the month of October alone. Small caps have been rallying furiously. So a lot of these things that we've been concerned about, they're resolving. And I'm not even going to get into the global breakout of things happening in Japan and Europe, the Russian stock market, Brazilian stock. I'm not going to give you the details, just to understand this rally I'm talking about in banks, in industrials. This is happening against the context of essentially breakout in markets that have been stuck in 10 and 20
Josh, can I ask a question, actually, because within earnings of in this quarter, we actually have seen CapEx improve sequentially, 3% versus 2%. I know a lot of that is Amazon. Do you think we're on the kind of the cusp of seeing CapEx improve? Because all to Josh's point, you need CapEx to actually improve for these sectors to continue to outperform. And then the other question I have is earnings revisions for next year are only down 1%. still at 11% growth. Do you think that's doable?
So two things. Let's do the last one first because it's more important. Conventional wisdom, we did a Mythbuster on this. Conventional wisdom is when the out-year earnings revisions are lower. It's conventional bear thinking, right? When out-years revisions are lower, that's going to be bad. So I'm at 176 for next year for my earnings estimate. Street's at 181. I'm expecting a multiple expansion. That sounds bananas, right? Who would pay more for disappointing earnings? Well, that's what happens. Right? The only 2 years that we've had net positive out-year earnings revisions this cycle, 2011, 2018, the 2 negative years. Okay, CapEx. In late 2017, you could see you were in a global synchronized recovery. The Citigroup economic surprise indices for the G10 were off the charts. Everything was wonderful. And people like me got on the set and said, oh, you got to buy the next thing because the global economy is doing great. Steph, global manufacturing on the rate of change is about as bad as it's ever been X2 2009. And it's inflecting. It's getting less bad. In this game from global manufacturing, you don't want to buy great. You want to buy bad that's inflecting is less
So this
bad.
is the beginning of the next big breakout. Is that what we're saying here?
Well, this is the beginning. This is the same. We keep looking for what we already found, Scott. We're in a manufacturing recession. That's the end of the sentence. We're coming out of it now, similar to those other two. And you had an offensive leadership once the 10-year.
So are these the shoots of the next big breakout? I mean,
correct.
Josh is painted a picture where
put up the XLI. Tell me,
you could make that case.
Put up three-year chart XLI. These are all your big industrial names. These are the companies that have exposure to the manufacturing recession here, the weakness overseas, the whole litany of things. Look at this horizontal resistance level that we have been essentially bumping our heads up against for a very long time. If that resolves to the upside, now you could say the market's stupid. Or you could recognize, hey, these stocks have paid their dues in purgatory, going nowhere, and now all of a sudden there is an inflection point.
And the negative earnings that are coming out of the industrials are actually being rewarded. You look at ITW, you look at United Rentals, look at Caterpillar. I understand. I'm just to your point.
Yeah.
I mean, prices and how companies and stocks react to earnings and news, it's very important.
Semiconductors made a new high yesterday. I think also to look at SMH. These are, in my opinion, semiconductors are the new industrials, are the new transports. They're in every single thing that gets sold. You don't have that breaking out to multi-year highs, all-time highs, as you do now, if you think we're on the verge of the manufacturing recession getting significantly worse. Now, we could be fooled. Market could be wrong. The buyers of all these chip names, the XLI names, the XLF, everyone could be totally wrong. It's happened before. But that's not a high probability wager, in my view.
I think the reality is this. Tony, you've been right. You've talked about 3 mini recessions, and we've heard a lot of others out there. The R word was everywhere just a couple of months ago, and all of a sudden, wow, what changed? Well, earnings. And then all of a sudden you started to see, it started off at the financials, now hitting, as Josh points out, 52-week highs. Look at the semis. Those have absolutely exploded to the upside. Then you take a look across at healthcare today. We're talking just today. Look at Pfizer's numbers. Look at Merck's numbers. Look at United Health's numbers from a week ago. These numbers have all been very strong, but the negativity going in and that whole idea, Scott, was something that really permeated throughout the market. Everybody talked about everything negative, but suddenly earnings
rightfully
came
so,
to
though. Earnings are still negative. I mean, we had a little kumbaya moment in trade, but there's a story out there today that the so-called phase 1 may not even be signed at APEC.
It's phase 0.5, and we're fine with it.
How do you know that you're not failing when the economy's slowing down? What I got wrong at the end of last year is I didn't expect the Fed to tighten. When the Fed excessively tightened, it made long-term yields come down because you knew you were going to predict economic weakness. How you know offense is working now, Scott, is because the 10-year note yield has bottomed, right? You got worse economic data, but long-dated maturities are going up. That is telling you that the Fed caught up to the market.
Fed's going to cut tomorrow, right?
Fed should cut tomorrow, and
then
they're
going
to
to pause.
Sound dovish. They're going to sound dovish. The best they got is 1.6 to 1.7 core inflation.
You think they're going to still sound dovish?
Absolutely.
Isn't the risk that they cut and sound hawkish that they sound pause?
if they have said that if the data gets worse, they will get more aggressive.
You said the data's getting better.
No, I said the data's getting less worse. In their mind, the data's still going down. You had ISM get negative. You have a lot of data showing slowdown. The key to me is the rate of change. They're looking at the absolute data. Think about this, guy. Let me ask you a question. Do you think the Fed on September and December of last year would have raised rates if they knew in this March if they were going to take 500,000 jobs out of the picture?
No, well, the Fed was also probably slow to understand the impact of trade and tariffs.
The best thing that I can tell the viewers, my clients, is this. The guys and gals printing the money told you they're going to print more money. Forget about right or wrong, good or bad. That's the fact.
Okay, that's back to the Paul Tudor Jones thing of, what was it, 6 months ago? When the Fed embarks on an easing cycle, you buy stocks. It's not that complicated.
That's been the story of 2019, and the Fed addressed the liquidity in the last 30 days, so I don't even care about the 25 basis points cut. Whether we get that or not, you've got the liquidity. But sitting and listening to all of this, tell me where we are now. Are we in the middle, or are we at the precipice of a chase for performance? Because today, on October 29th, there's not much time left in the calendar year, and everyone's going to scramble to save their jobs because they've been defensive and they're underperforming. Where are we in the chase?
So I looked at Mike Santoli at the closing bell. I think it was on October 2nd, and I was like, they finally said, wow, it's nice to hear somebody optimistic, and I looked at him, I go, I think it's a career-ending call. Right? In other words, it's been tough to be bullish with the backdrop we have. I think we're on the beginning of probably a 30% move, and I don't get that by this wild opinion. I get it by the data. Coming out of the last two post-mini recession periods, when the 10-year note yield bottomed, the S&P went up over 30% over the next year to year and a half.
So growth or value, though, in
value.
So
that's offense.
Value.
So here's
interestingly, we're at the beginning a 30% move for the S&P.
Yeah, you have a good shot of a 30%. So where do I get that on the fundamental basis? When the 210 curve inverts, which I've killed you all with, when it inverts, your move to the peak of the cycle is 34% when you have a low core inflation, low interest rate environment, the last three cycles.
So then we can have you back and we can begin talking about euphoria, the blow off top, and how bull markets don't end out of thin air.
So let me answer Joe's question. I do want to say something. In October 2nd, nobody wanted to be bullish. You know, it was an easier call. Right now, listen to the desk, listen to me. I'm sure the viewers are saying, here comes the bull because we're at a new high, even though it was scheduled weeks ago.
Let me check Twitter while you talk. They probably are.
I do think it can pause here because everybody sees the breakout is too obvious. You can come back, retest that breakout point, and then I think you're going to grip it and rip it because earnings, the global economy is turning. The guys printing the money telling you they're going to do more of it. You got a millennial demographic spending. Corporate credit and household credit is wide open.
All right. Great seeing you. Thank you for your insights. We always like the conversation. That's Tony Dwyer of Canaccord Genuity. Coming up, the state of retail and the consumer. We've got the Lululemon CEO. He'll be with us next. Shares of that company, well, they're only up 70% this year. That exclusive interview straight ahead on The Half.
One in 10 Londoners surveyed said they'll give more to charity in the next 12 months. Are you one of them? At CAF, we help generous people like you support their favourite charities by making giving simple. And we provide charities with the tools they need to perform at their best. So together, we can make a bigger difference for our communities. We're a charity and a champion for better giving. We are CAF, and we make giving count. Visit cafonline.org to find out more.
It's another Tuesday afternoon, yet another cold day.
So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and explore tropical rainforests. Fly from London Gatwick to Costa Rica with British Airways from £218 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want sports, these games are unmissable. Get In. Or crime dramas, I've got loads. and they're never going to guess who did it. Or how about dramas? I've got Emmy-winning shows. Oh, I know, so fancy. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus, month passes auto-renew, terms apply.
Did you get the milk?
I bought brie, fish fingers, and washing up liquid.
You went out for milk.
I won't be long.
You can't always control what you spend, but you can save as you spend with Save the Change. When you use your Lloyds Bank debit card, we'll round up the amount to the next pound and transfer the difference to your nominated Lloyds Bank savings account. Feel in control every day with our mobile banking app. Lloyds Bank, by your side. T's and C's apply.
Shares of Lululemon soaring this year, up 70%. Courtney Reagan now joins us from the WWD Retail Summit in New York with that company's CEO. It's a halftime exclusive, Court.
Hi, Scott. Thank you very much. I am joined with Calvin McDonald, CEO of Lululemon. So Scott just sort of teed up a perfect first question. The shares are up about 70% so far this year. You laid out a pretty ambitious growth plan. Citi just put out a note yesterday saying, look, Lulu's got to have a flawless quarter or else there's just built-in disappointment because so many things have been going right. They are a little worried that promos are a little higher than what they had seen previously from Lululemon. So do you want to address that? Have you been more promotional than planned?
We've never used pricing or promotional activity to drive our top line business. We always remain focused on product innovation as a way to delight the guest and to grow our top line business. And there's been no change to that approach this quarter or from a year-to-date basis.
So investors shouldn't be concerned about margin compression based on this Citi take?
We haven't changed our approach, and I'm very pleased with our innovation and what we've seen from a year-to-date perspective and how the guest continues to respond to our product.
Innovation and product is certainly a big part of what every retailer and every brand has to put forth to excite the customer. On the last earnings call, you also pointed out two things, though, that are a bit out of your control, sort of the athletic space in general, and the fact that you believe there is less seasonality in a product that Lululemon sells. So if two of the three factors are out of your control, can you continue this growth streak?
Well, I think out of our control in the sense that, not having a highly seasonal business and one that's more dependent on core is a real positive to our business. It allows us to sort of leverage our bottoms business where we're incredibly strong. It allows us to leverage the fact that guests are interacting with the product because it's solving needs that they have in their life, either at the studio or to and from. So I think that's a real good thing for our brand and our business. And then when we just look at the opportunity of what's happening in the athletic space in general, I do think we're influencing it and we're benefiting from the fact that people are just more concerned with how they feel. And the health and wellness industry, as we know and we talk about, is a $3 trillion industry in which I think Lululemon has a real authentic opportunity to play in and do more than how we're just playing today.
And you've looked at new categories like self-care, things like dry shampoo, deodorant. Is that something that is going to be a substantial new revenue stream? Is it just slightly incremental? How are you looking at that opportunity?
What's exciting when we look at our 5-year growth plan and the power of three, and we've talked about doubling our men's, doubling our online, and quadrupling our international, is all of that growth is coming from our core business as we know it today. And we will continue to test and play into new categories, and we're going to test and play into new opportunities, be it membership or events as a means to interact and build a relationship with our guests. So our 5-year plan is no dependency on it. We see an opportunity for our even future growth and incremental, but all these are incremental and they're exciting to see ways in which we can build that relationship with the guest.
You mentioned membership. So you've been testing this loyalty program in several cities. I believe you had shared it was $128 and the benefits are varying a bit based on what you're learning. Can you give us some updates on how that could have a financial impact on the company?
Well, we learned initially that we could play with the price points. So one of the initial reads was, what's the right value proposition and how will the guests respond? The last few test markets, we've been in 4 now, just recently in Chicago, which was great because it supported our Lincoln Park experiential store. We tested $150. That seems to be the price that we're comfortable with, where we sold out on our test. Guests are responding incredibly well. And it really is the pinnacle expression of how our vision of igniting community, of people living the sweat life, comes to life, and we're able to deliver that through the guests. So we're really excited about the read on the pilot so far, and look for exciting opportunity with that moving forward.
So when you say they're really responding, what do you mean they're really responding? They're buying more, they're interacting more with the brand?
All the above. A big part of the essence of the membership is obviously driving loyalty. It is interacting with Sweat in the local community through our ambassadors and through studios. So we want that engagement in the program. And they're engaging with the brand more in terms of how they're spending. So we see a lot of benefit coming out of the program.
I believe Pete Najarian has a question back in the studio.
Yeah, Calvin, I've been a long-time holder of your stock, and I'm curious, one of the reasons that I've liked it so much is you started off strong, but you've moved into the men's category in a big way. Is there still room for expansion there for you in terms of not just the stores themselves expanding, but I'm talking about what you're putting out in terms of what the men are out there looking to buy?
It's a great question. We're really excited about our men's business, not just performance from a year-to-date basis, part of our 5-year growth plan to double it. But we know our awareness and consideration within the men's category is still low. And that is where the opportunity lies. So we will continue to expand and bring product. We see that both in opportunity around run, train, and yoga, which is our own sweat categories. And on the move, ABC is a great anchor, but there's a lot of opportunity to expand beyond that. And that's the work we've been in, and we're going to continue to do that. So I see the growth coming from acquiring more men, driving market share with them, and then driving share with the men as they experience Lululemon and get them to spend more.
I believe Joe Terranova also has a question.
Hi, Mr. McDonald. Yes, I'm a shareholder as well. My question revolves around athletic footwear. Could you tell me who exactly you believe you'll be grabbing the market share from over the next 5 years as you get aggressive with this plan?
Well, we know footwear is a very competitive category. So I think it's hard to point directly to one particular player. What's exciting for us is, as I mentioned, we see an opportunity. We've tested footwear in a way in which we can sell to our guests. And in the coming, few years, we're excited about some white space that we've identified and the product that we'll be launching and testing. And then we'll be able to grow from there. And our 23 plan isn't reliant on footwear at all. So it's all going to be incremental. We're going to test and learn, but we feel we've identified some opportunity that will be truly white space, and we'll see how the guest responds.
Calvin, before we let go, I'd be remiss if I didn't ask about China. That's a key market of expansion. You're looking to double your stores there. Is that still the plan? Has anything changed as we've moved forward with this trade war between the U.S. and China?
I was just there a week ago touring the market. We've doubled our store count from a year-to-date basis. We'll end the year at 30. We started with 15. The success of our brand, the momentum around the sweat life within China, I leave energized, excited. There's no change. The community is strong. The brand has nothing but potential around awareness and consideration. So very excited about what the team has done and what our potential is there, and our expectation to quadruple our international market.
Calvin McDonald, CEO of Lululemon, thank you for joining us here today from the WWD Apparel and Retail CEO Summit New York. I'll send it back to you in the studio.
And we appreciate it so much, Courtney. Thanks so much for bringing that interview to the halftime report. Okay, it was mid-September, and Jim Chanos sat down with us at Delivering Alpha. That's our annual conference. And he said this about that stock right there.
Right now, Grubhub is making almost no money per order, something like 15 cents an order. I mean, there's just no margin in this business. And you're basically putting two more hands outstretched, for the restaurant guy saying, pay the delivery company, pay the driver for money that they're really not making.
Okay, so that was Jim Chanos back in September. That is Grubhub today, down 43%. Their guidance was below expectations. Competition is taking a big way out of this company. You guys seen anything like this? 43% in a day for a company like this?
You can't have growth slowing and investments rising for a growth stock and an expensive stock for sure. So, and not to mention all the competition. So I really think even down this much, it's a no touch. You have no idea at the end of the day what the earnings are going to be.
Well, I'm going down the list here of sells on this stock today. New
sells?
There are a lot.
I love when they
thank
do
you
that.
very
It's
much.
really
Thank you very
helpful.
little.
Thanks for the reaction.
I should say. Chanos gave you a sell.
Yeah.
Or he gave you a short.
So Chanos, I think, really within a very short period of time, laid out very succinctly why this is not a good business, even in the absence of competition, because of how little the drivers are making, because of how little restaurant owners want to pay for another driver, and then just throwing in the fact that Uber Eats, Jim's actual quote was, "This is like Grubhub is locked in a cage with a psychopath with an axe." Like, if Uber's in this business, they're not going to lose it. So from a lot of perspectives, it didn't make sense to be a believer in the fundamentals of the company. And now you throw in an earnings disappointment, huge technical breakdown in the chart. So who's really looking for this thing? Not value people, not traders. Like that's why it's so hard for these types of situations to bottom, at least on day one.
Yeah, that's a tough chart to look at today for those who are long this stock. Don't want to make light of that. A lot of people on the other side who are getting hurt today. That's down 44%. Let's talk about some moves that you had, Steph, before we go to final trades. Selling Verizon, selling Twitter. Talk to us. And we don't have much time, so be quick if you could.
Verizon did what it was supposed to when I had the barbell of being defensive and being offensive. I want to get a little more offensive into the end of the year. I took my profits in Verizon. Watching AT&T, liked that yesterday. Twitter, I think it's dead money until at least the end of the year. I like the 2020 setup, but I'll buy it back in January. I put the money into Amazon, which I actually think had a much better quarter than people gave it credit for.
And for those who may not know or tuning in for the first time, it's just adding to Amazon.
Yes.
You've owned it for a long time.
Yes.
Just building that position. Okay, we only got 15 seconds.
Yep.
Give me a
Real
final
quick.
trade.
Yep, Facebook. They're buying. I think this thing's ready to explode to the upside.
Mr. Brown.
Watch XLI.
Ms. Link.
NXPI.
IHI, Medical Devices ETF.
All right, good stuff. It's been a busy hour following the Boeing testimony, everything else happening. Does it for us. Thanks so much for watching. The Exchange with Kelly starts now.
Thank you, Scott. Hi, everybody. And here's what's ahead. Boeing CEO indeed facing a lashing on Capitol Hill that will continue into tomorrow. It's not tanking the stock today. We're going to talk about why investors aren't more fearful about the consequences here. We'll discuss that. And California is the most populous state in the nation, yet it's facing intentional blackouts that are impacting millions of homeowners and businesses while still battling wildfires. We'll look at the politics and the company missteps that got us here. And here comes the Fed. 24 hours to go until the next interest rate decision. Could a hawkish statement from the committee put a hold on this rally? We'll debate that. But we do begin with today's markets. Dom Chu on the number.
All right, so it seems like a hold right now, but we did hit a record intraday high on the S&P 500. So we're going to put our little star right over here because the S&P 500 is still well above that 3,000 level and did hit a record level at one point today. The Dow Industrial is just about 1% or so away from its own record high levels, and the NASDAQ Composite taking a bigger hit today, down by 1/3 of 1%. One of the standout sectors in today's trade is healthcare. Now, I mention it because healthcare on a year-to-date and one-year basis is still the second worst performing sector in the S&P 500, second only to energy. That's the worst one out there. You can see that particular ETF that tracks healthcare up 1.5% today, driven in large part by mega cap earnings results positively from Merck and Pfizer. Watch healthcare. And if you're looking for another stock of the day, check out what's happening with General Motors. This particular stock is motor and higher right now on the heels of better than expected earnings and revenues. They did cut their outlook because of the effects of the strike, but it could provide some clarity for stuff going forward in their next year. So watch those GM shares up 5%. But remember, Kelly, from the peak that we saw earlier this year, those shares fell by 19%. They've now rallied back to current levels by about 14%. We'll see if that positivity stays for GM. Back over to you.
Yeah, a turnaround day for them, Dom. Thanks very much. And welcome to the Exchange, everyone. I'm Kelly Evans. Boeing CEO Dennis Muilenburg grilled on Capitol Hill today on what led to the deadly 737 MAX crashes. Our Phil LeBeau had a front row seat to all of that. He joins me now with more. And Phil, we saw the stock initially up several bucks, and then it kind of sold off as the session continued.
Well, Kelly, this was a bruising couple of hours for Dennis Muilenburg. Nearly every senator who was a part of the Senate Commerce Committee who questioned him today, they blasted him in some fashion for the development of the 737 MAX. But no senator was as vociferous as Ted Cruz from Texas. Take a listen.
You're the CEO. The buck stops with you. Did you read this document? And how did your team not put it in front of you, run in with their hair on fire, saying, we got a real problem here? How did that not happen? And what does that say about the culture at Boeing?
Time and again, Dennis Muhlenberg continued to say that there were mistakes that were made, that Boeing will learn from them, and that the culture of the company is one that is built around safety. Though I should point out that a number of senators said, yes, we've heard that, and we also see you pivoting away from the questions that we're asking here. Boeing shares, as you mentioned, Kelly, they were up earlier in the day, pulled back just a little bit. But the reason they're not selling off, Kelly, is because even with all of these questions about the 737 MAX recertification, look at that backlog. Has not changed. You have not seen airlines canceling orders, and so eventually the belief is they will get these planes built and delivered.
All right, Phil, thank you very much. Phil LeBeau following today's hearing for us. It's the House's turn to grill Muhlenberg tomorrow when he testifies before the Transportation and Infrastructure Committee. Joining me now from Capitol Hill is Representative John Garamendi of California, one of the lawmakers who will be questioning Muhlenberg tomorrow. Congressman, welcome.
Good to be with you.
What would you, did you get what you wanted out of today's hearing, and what would you like to ask the CEO about tomorrow?
Well, basically the same set of questions. Why did Boeing ignore clear indications that they had a problem with this? Why did they try to cut corners? Was it all about the profits of the company, or is it about the safety? What is the actual value of Boeing? Not the monetary value. What are its values? Safety of the aircraft or increased profits?
Do you think there's any way that this current CEO should stay in his position?
I think CEOs that have done the kind of things that we've seen major companies go through, they ought to be fired, and they ought not have their bonuses. They ought not walk away with all of the bank accounts in their pocket. We see too much of that. We can give example after example of where bad behavior, bad outcomes, death is rewarded with a big fat paycheck on the way out the door.
You know, a lot of times, too, when there's a huge corporate incident like this, we see a massive loss in shareholder value. We have not seen that this time around. Should there be more of a penalty for this company beyond what the market and lawmakers have so far hit them with?
The penalty ought to go to those that are responsible, not to the shareholders who have nothing to do with the actions of the company other than perhaps voting occasionally in their processes. However, going forward, this is not the only issue. This 800 MAX is not the only issue with Boeing. We have a serious problem with Boeing in the military side of it. The KC-46, the new aerial refueling tanker, doesn't yet work. There are ongoing problems. It's been delayed at least 4 years, probably a few more before it actually gets out to the U.S. Air Force. So we've got a lot of problems with Boeing. Certainly the deaths occurring with the MAX 8, as well as the KC-46. And now they want to bid on other major contracts to the U.S. military. And I'm going, you guys have to prove yourself. And if that means a bunch of the executives take the big dive and leave without a fat going away present, that seems to be the right thing to do.
All right, Congressman, since we have you here, I do want to pivot and ask, because you were not only the Lieutenant Governor of California with Arnold Schwarzenegger there, but you also served as insurance commissioner for years. What do you make of what's happening with these rolling blackouts and wildfires? This is a massive blow to California. It's going to raise the cost of living. There's no clear answers as to how this gets fixed. I mean, tell us what possible solutions there are to this incredible problem.
Well, let's put the insurance piece aside for a few moments. Although that is a very, very serious problem, because the insurance companies are literally abandoning large swaths of the California homeowners. The other part really goes to PG&E and the utility companies in California. They've simply been mismanaged over the last 20 years as the energy production has radically changed. Solar, wind, and the things that we saw with Enron back in 2000. The energy companies, PG&E and Southern California Energy, have simply not been able to respond. That's a management issue, not anticipating what's going on. And we do know that for PG&E specifically, they simply have not invested in modern distribution technologies.
Right.
Their power lines are ancient and in many cases falling down. So we're talking about an enormous investment that has to be made in California to secure its electrical energy systems. PG&E in bankruptcy is probably not able to do that. And I know you got a lot of hedge funds sitting around probably watching this. And I'm saying, don't don't you dare come to California and rip off what remains of the assets of PG&E. We need investment. We need serious investors that are willing to take the old ancient way of a return on investment consistent with a bond, not with a heady stock market.
But Congressman, that said, there are we've heard from the governor who said he would like to see a company like Berkshire Hathaway come in and buy PG&E. We've now seen everyone from Bernie Sanders to Representative Ro Khanna on CNBC this morning say they think that this utility should be taken over by the state, which would effectively put taxpayers on the hook for that investment. Which of those two options would you prefer?
Probably something in between. Clearly, enormous amount of money is going to have to be invested in the energy delivery systems. And that goes all the way from the rooftop solars to the main distribution lines coming in from Oregon and from the Colorado River. All of those things need to be upgraded, and that's going to take a lot of money. So whatever comes out of this bankruptcy, that plan has to be one in which the owner, the current owner, or future owners have to be willing to put in billions and billions of dollars to upgrade the system. A state as important as California, the fifth or sixth biggest economy in the entire world, cannot function on shutdowns every other day.
Yeah, no, it's extraordinary. Congressman, thank you so much for your time today.
Thank you.
Congressman John Garamendi of California. Turning now to Beyond Meat, the company today beat on its earnings and raised its full-year outlook, but the stock is down nearly 20%. We also have the expiration of the IPO lockup today, and analysts are pointing to increasing pressure from the competition, which is something the company's CEO, Ethan Brown, addressed on Squawk Box this morning.
If you look at our velocity this quarter over the same period last year, we're up 144%. And people say the competition is coming. It's been here. We've been competing for a long time. We feel very comfortable about where we are. So we don't look at the 6 or 12-month period in the stock market. We look more about, are we building the right fundamentals for the business? And we think we're doing that.
And Leslie Picker joins me now on this. Leslie, this is a $14 billion company at its peak this summer, just over $5 billion today.
You're right, Kelly. And when do you ever hear a situation where a company beats on the top and bottom line, raises full-year guidance, reports its first quarter ever of net income, and then you see the stock decline over 19%? Clearly, there are technical issues at play here. And I think a lot of investors are looking at this lockup expiration today and saying, you know, when is going to be a good time to get into this stock? Because there have been some valuation concerns ever since its IPO. Top performing IPO of the year, still up almost triple what it was when it went public. So it's definitely an interesting dynamic for this one.
Yeah, so we talked about whether the selling pressure was enough with all of these kind of known knowns, Leslie. We've gotten through the earnings and now today the lockup period, and this stock is falling another 20%. So the answer was clearly no, that there's still, I mean, the selling pressure is still so intense.
Oh, the selling pressure is incredibly intense. And oftentimes when you see these lockup expirations, you see a lot more selling at the beginning of the day than you do the end of the day. It'll be interesting to see in the next couple hours exactly how Beyond Meat's stock price recovers, if it does at all. And then also studies have shown that subsequent to a lockup expiration day, you do tend to see that stock price tick up higher, just as people are seeing that as a good entry maybe to get into the stock as that headwind from the lockup expiration is behind them. But again, this stock is still very expensive by many, many metrics. And so I think there are still a lot of investors who are waiting to see more on a fundamental basis what things look like with their partnerships, what things look like from a competitive standpoint.
Yeah, for sure. Leslie, appreciate it today. Thank you. Leslie Picker at the New York Stock Exchange. Here's what else is ahead on the exchange.
Coming up, just 24 hours left until the Fed's decision on interest rates. Will they give the street what they want? And will we see a big hedge when it comes to December's outlook? Plus, Grubhub blames promiscuous diners, that's right, promiscuous, for its downfall. And a look at how the country's most populated state got to a place that required mandatory blackouts. This is The Exchange on CNBC.
We're the Nigerian brothers.
It's another Tuesday afternoon, yet another cold day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick to enjoy a warm Bayesian welcome.
How are you doing? Enjoying the sunshine?
Fly from London Gatwick to Barbados with British Airways, with flights and 7 nights hotel from just £699 per person. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
3 is a magic number. 300 schemes to help bugs and bees, supporting environmental needs. 8,000 grants for local sports, and performing arts get our support. 7 millionaires every week, the nation's on a winning streak. 30 million pounds to good causes every week. Who'd have thought it? These are magic numbers.
Your numbers make amazing happen. 25 years of the National Lottery.
Rules and procedures apply. Players must be 16 or over.
Hello? This is Dustin. I found something. Is anybody there?
We hear you, Dustin. With Sky Q, you can easily catch up on epic Netflix shows like Stranger Things and then watch award-winning Sky originals like Chernobyl. Get Sky and Netflix all in one place on Sky Q for one surprisingly low price. Just £25 a month. Visit sky.com and join today. Offer ends November 14th. 18-month minimum terms. Prices may change during contract. Requires Sky Q box connected to broadband. Set up from £20. Further terms apply.
Hi, this is Brian Weber, host of NFL First and Goal every Sunday, kicking off at 1 Eastern only on TuneIn Premium. Be sure to listen this Sunday for the ultimate football fan experience, featuring 7 hours of commercial-free coverage of every scoring play around the NFL.
Welcome back to The Exchange. The Fed is expected to cut rates again tomorrow, but what happens beyond that is more of a question mark. That's where CNBC's latest Fed survey comes in, and Steve Leisman is here with some insights.
Yeah, a lot of clarity, Kelly, on what happens tomorrow. A rate cut by 25 basis points, but things get cloudy thereafter. Take a look at our Fed expectations from our Fed survey, 43 fund managers, economists, and strategists surveys. 25 basis points, 79% say that's going to happen tomorrow, which is a little bit low, actually, going into a Fed meeting, but a clear majority believe it. Next rate cut, the average is February 2020, but only 37% expect one in December, which is to say a pretty strong majority think the Fed is going to pause after this rate cut tomorrow. And then the 2020 median funds rate of 1.4% actually tells you a lot. It tells you that they see it coming down once, and they're very divided about whether there's even going to be another cut through 2020. Even though there's that division, there's a lot of concern about the economy. It stems from the trade concerns, and it stems from global economic weakness concerns. We are at 34% probability of a recession in the next year. And as you go back here, along the whole time we've been asking, it's the highest we've had since 2011, a 34% probability. That's gone up and up and up, pretty much mirroring as the trade war and the global economic weakness have both intensified. That's not the base case, though. Take a look here at the forecast. 2.9 was the number in 2018, coming down to 2%. Down a little bit more, 60% of our 43 respondents, they've lopped off growth because of the tariff effects, and then it bounces back up. So this 2% number is seen as the trend. The way to think about that recession number is inside of this forecast, there's about a 34% chance this does not happen, that in fact we get a recession in there, but it's not the base case, Kelly.
All right, Steve, thank you very much, sir. So what happens if we get a hawkish cut tomorrow and the Fed is done after that? Joining me now are Andres Garcia Amaya, the CEO of Zoe Financial, and Dean Mackey, chief economist for Point 72 Asset Management. Welcome to you both. Dean, so people have said, look, Powell's a lawyer. He likes precedent. He has cited the 1990s, late 90s rate cuts, in which we had 3 total, and then the Fed was done. So if this is now the third one and we don't get any more after this, what does that mean for the markets?
Well, I think that Chair Powell does seem to have latched on to those 90s examples as the kind of tightening cycle that we might expect, absent a further weakening. So I think what this means is that the markets aren't going to be supported if the Fed doesn't continue to cut every meeting as they have been. And how that works out depends on how the economy proceeds at that point. We think that the economy will hold in on solid growth, and that the market should do okay in that scenario.
So what's your actual forecast right now? You think they're going to do this one and then be done, or do you see more coming?
We do think that they're done at this point.
Okay.
Now, it's hard to have strong conviction with this Fed because if things start to worsen a little bit, they may well slip in another cut at some point, but we think they've done enough at this point.
And Andres, we've seen the market sort of throw a fit with their prior rate cuts, ironically, because the first one especially seemed to have this hawkish tilt to it, where Powell in the press conference said this was just a mid-cycle adjustment and not more, even though that turns out like it might be exactly right. So tomorrow, what are the odds that he says something that is just not dovish enough, again, for the market's expectation, or has the landscape changed and we're now okay with that scenario?
I think the landscape has changed. A big difference now, even just from 6 months ago, is how many other central banks are cutting, right? China's cutting, Europe's cutting, all major emerging market countries are also cutting, and for much higher levels. So I think the landscape has changed, where the market is looking at next year, especially the first quarter, as a potential bounce back from global growth as a result of all this monetary policy easing.
But that's also one reason why the White House and the president have said that we need to, or our Fed needs to do more. He says, Europe, they're killing us. Everybody else is way ahead of us on this. I mean, is that the way that these cuts play out? Is that the right dynamic?
I would say it's not directly the reason they would do it, but if the spread continues of where interest rates were for the U.S. versus the rest of the developed world basically continue to spread out more, I think it would eventually force the Fed to cut further, right? The dollar would be a reflection of that. Essentially, more dollar strength would be negative for the U.S. economy.
Yeah, Dean, the two kind of fundamental reasons why we've seen these rate cuts this year, the main one obviously is manufacturing. That's the one place where the survey data, some of the hard data, the numbers have really kind of turned over. The rest of the economy has held up relatively well. The second big warning sign, I guess you call it, is what's happened with the yield curve. On both of those counts, do you think the Fed needs to continue to cut rates, or are they okay leaving the status quo here?
Well, if you look at the actual incoming economic data, in most cases, the Fed wouldn't be cutting at all at this point.
Right.
We have 2% growth. We have the unemployment rate at 3.5% and falling. Inflation's close to target. So really, the Fed's been cutting to address risk to the outlook. And if those risks don't come to fruition and we don't turn into a real recessionary downturn, then the Fed doesn't have to keep going at this kind of a pace.
But it's going to take a while to find out, right? I mean, we're only a few months into this now, and even the recession headlines from this summer and from late last year, none of that has panned out yet.
That's right, and that's why I think the Fed's thinking of this as a limited cycle. They're doing a preventive easing, and if things don't deteriorate, then that should be enough.
Andres, a final word. The risks to the market tomorrow, you think, are?
I would say, look, you got to look not only at the equity market, but at yields, long-term yields, right? If long-term yields actually start to peak a little bit higher as a result of the bottoming of PMIs and the global economy stabilizing, the Fed might not have to do anything to improve the yield curve.
Well, maybe then can they delay the meeting a few weeks and say we're going to reconvene?
I don't think they have the privilege.
I don't think that's on tap per se. But guys, thanks very much. Appreciate it today. Andres Garcia Amaya and Dean Mackey. Coming up, supply shortages and rising prices are putting pressure on the housing market. It's leading more and more people to say yes to more building, even in their own backyard. We have those details ahead. Plus, it's the morning after for Apple's new morning show, and the critics aren't being too kind. Reason to worry, or does Apple have a leg up on the competition in the streaming wars? That's ahead.
Fed Survey.
It's another Tuesday afternoon, yet another cold day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick to enjoy a warm Bayesian welcome.
How are you doing? Enjoying the sunshine?
Fly from London Gatwick to Barbados with British Airways, with flights and 7 nights hotel from just £699 per person. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Fall in love with the brand new iPhone 11 at Tesco Mobile. Take amazing photos with Apple's best ever ultra-wide lens camera. You can get the iPhone 11 for just $37.75 a month with no additional upfront costs. What's not to love? Search Tesco Mobile or visit us in store. Tesco Mobile. Every little helps.
36-month credit agreement, rolling monthly usage contract. Subject to status, phase policy applies. See tescomobile.com/terms.
Hello? This is Dustin. I found something. Is anybody there?
We hear you, Dustin. With Sky Q, you can easily catch up on epic Netflix shows like Stranger Things and then watch award-winning Sky originals like Chernobyl. Get Sky and Netflix all in one place on Sky Q for one surprisingly low price. Just £25 a month. Visit sky.com and join today. Offer ends November 14th. 18-month minimum terms. Prices may change during contract. Requires Sky Q box connected to broadband. Set up from £20. Further terms apply.
Swinging a long drive, left field. He's got one now. Kurt Suzuki gives the Nationals the lead.
The excitement of the Fall Classic is here, and you can hear every call of the 2019 World Series on TuneIn Premium. The action continues tonight with Game 6 between the NL champion Washington Nationals and American League champion Houston Astros. Listen live at 8 Eastern as two of Major League Baseball's most storied franchises look to bring home the World Series title. The 2019 World Series is on TuneIn Premium. Hey NFL fans, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you have unlimited access to every team and every game in the league. Listen live as it happens or on demand. Anytime, anywhere. All season long. Search NFL today.
Far wing, elevates, triple bucket.
The roar of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut
the
it.
Sideline, the man fleet for three.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now, hear it live on TuneIn.
Fake in the lane, turnaround jumper from 8 feet is good on
Search
the right.
NBA today to start listening.
Welcome back. Here are some of the movers this hour. Shares of Alphabet are down more than 2% after missing on earnings per share estimates. The bottom line miss comes as the company reports record quarterly expenses as it continues to invest. Shares of Slack, meanwhile, are up 5% today after being initiated at overweight at Piper Jaffray. The firm putting a $30 price target on the stock, saying the risk reward has turned favorable after its recent sell-off. And take a look at shares of Apple. After hitting an all-time high every day since October 16th, including today, the stock has reversed course and is now down 2%. And now to Sue Herrera for a CNBC News update. Hi, Sue.
Hello, Kelly. Hello, everyone. Here's what's happening at this hour. We begin with an Army officer at the National Security Council testifying in the impeachment inquiry. Lieutenant Colonel Alexander Vindman is prepared to tell House investigators he listened to President Trump's July 25th call with the new Ukrainian president and then reported his concerns to the NSC's lead counsel. Masked gunmen opened fire at Iraqi protesters in the Shiite holy city of Karbala, killing 18 people and wounding hundreds more. It was one of the deadliest single attacks on protesters since anti-government demonstrations erupted earlier this month. Lebanon's Prime Minister Saad Hariri submitting his resignation, declaring that he had hit a dead end in trying to resolve the country's crisis amid an unprecedented wave of protests against Lebanon's ruling party. He bowed to one of the central demands of anti-government demonstrators. And take a look at this. One of NASA's satellites capturing images of California's devastating Kincade fire from space. It has scorched more than 75,000 acres in Sonoma County, and it is just 15% contained. You are up to date. That's the news update, Kelly. I'll send it back to you.
Yeah, we'll have more on that shortly. Sue, thanks very much. Sue Herrera. In fact, here's what else is ahead on the exchange.
Ahead, from $149 to $33. A look at one stock's fall from grace and why they're blaming promiscuous diners. Amazon's move into groceries is turning out to be harder than it thought. And directors are up in arms about a potential new Netflix feature. That's all ahead on The Exchange.
For farmers here,
it's another Tuesday afternoon, yet another cold day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick to enjoy a warm Bayesian welcome.
How are you doing? Enjoying the sunshine?
Fly from London Gatwick to Barbados with British Airways, with flights and 7 nights hotel from just £699 per person. Don't miss out. Book by November the 12th at ba.com/wintersun. With British Airways, incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Hello? This is Dustin. I found something. Is anybody there?
We hear you, Dustin. With Sky Q, you can easily catch up on epic Netflix shows like Stranger Things and then watch award-winning Sky originals like Chernobyl. Get Sky and Netflix all in one place on Sky Q for one surprisingly low price. Just £25 a month. Visit sky.com and join today. Offer ends November 14th. 18-month minimum terms. Prices may change during contract. Requires Sky Q box connected to broadband. Set up from £20. Further terms apply.
Hey, you. Yes, you. We didn't make Nature Valley nut butter biscuits so you could just sit and munch them on the train.
Not when there's a whole forest out here to explore.
Isn't that right?
Go get it! Delicious whole grain biscuits with a real nut butter filling. Nature Valley Nut Butter Biscuits. Get out more.
Swinging a long drive, left field. He's got one now. Kurt Suzuki gives the Nationals the lead.
The excitement of the Fall Classic is here, and you can hear every call of the 2019 World Series on TuneIn Premium. The action continues tonight with Game 6 between the NL champion Washington Nationals and American League champion Houston Astros. Listen live at 8 Eastern as two of Major League Baseball's most storied franchises look to bring home the World Series title. The 2019 World Series is on TuneIn Premium. NFL fans, hear every live game on TuneIn Premium.
He goes to the right, throws to the end zone, caught by Fells.
15, 10, 5, touchdown, Green Bay!
This Thursday on Halloween night, hear the home and away call as the San Francisco 49ers visit the Arizona Cardinals at 8:20 p.m. Eastern.
Back, what a block! Touchdown for Tevin Coleman going the other way! Touchdown!
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Welcome back. Let's catch you up on a few stories that should be on your radar today. It is time for Rapid Fire, and here to break down the headlines are Contessa Brewer, Frank Holland, and Seema Modi. And we have a nice green theme going on here. I would say it's for the market, but it's not doing jack. Grubhub shares, though, are plummeting after a disappointing earnings report. The stock is down 42% today to about $33. That compares with a high of nearly $150 last year. The CEO, Matt Maloney, pointed the finger at users in his letter to shareholders. And this was the quote of the day, saying, online diners are becoming more promiscuous. He says our newer diners are increasingly coming to us already having ordered on a competing online platform, and our existing diners are increasingly ordering from multiple ones. As a result, he says the easy wins in the market are disappearing a little more quickly than we thought.
What happened to monogamy in dining?
What happened?
Here's the thing. If you have a lot of options and if you're being lured in by get your first meal on us, get $5 back, why wouldn't you be promiscuous? And it sounds to me like they don't have a great plan to turn it around when they say, we're going to go and try multiple strategies.
Bingo.
Hello, throwing spaghetti at the wall and seeing what sticks.
And that's why the stock is down the way
I think it raises a great question. Does the customer loyalty lie with the restaurant or the delivery service? Obviously, the restaurant.
Yes.
If my favorite place in Soho that serves chicken wings says they're going to change to Uber Eats, I'm going to go and figure out Uber Eats. I'm not going to find a new place to get my chicken wings.
So the main competitive threat, too, has become DoorDash, and it's showing up across the industry. You hear everybody talking about it. And Frank.
Kelly, you're actually just hitting on it. So number one, it's not about promiscuity for online diners. It's really about preference.
Exactly.
And DoorDash is growing exponentially. It had 114% sales growth in September. So those diners don't seem to be so promiscuous. It's also gained so much market share. More than a third of the food deliveries in the U.S. are DoorDash.
And it's interesting, DoorDash's reported valuation right now, by the way, backed by SoftBank, $12 billion. And with today's losses for Grubhub, a publicly traded company, its market cap is around $4 billion.
Wow.
So it just shows you that
it's a huge reversal. And Grub, which owns Seamless, they had the first mover advantage. I mean, and it also, there's a little bit of an urban suburban thing here that interests me because we were huge Seamless users in the city. As soon as we got to the suburbs, to your point, Seam, all the places we wanted to have delivery from, there's little signs that use DoorDash. We switched over. It's not necessarily promiscuity. you just found a new dancing partner, and you stick with them because and they say that that's where they're winning.
DoorDash also doing some M&A. Sorry to interrupt. They bought Caviar, so they're also acquiring other companies in the space and just growing their market share that way as well.
Yeah.
And Grubhub says they're going to try again. They're going to go back and look to partner with more restaurants, but can they do it? And is that what, I mean, if you're a restaurant operating on the thinnest of margins, do you really have time to go through and partner with multiple delivery companies for your food?
If Grub's going to win by giving them more of a discount, is that even sustainable in the long run? I'll also be sure to catch our interview with Oppenheimer analyst Jason Helfstein. He was one of those who had a double downgrade of the stock today. He slashed his price target from 91 to about 35. We're going to speak with him on Power Lunch next hour. Next up, speaking of delivery, Amazon is going to make 2-hour grocery delivery free now for Prime members. This one really caught my attention. This was a $15 a month service that they just made free. And now they'll have access to tens of thousands of products. Amazon telling CNBC today that groceries have been one of its fastest growing segments and calls the move a game changer.
I think this has always been a big pain point for a lot of customers who are Prime members. They say, okay, it's great to be able to order your groceries online, but the minute you check out and you see that $14.99 fee added to your total sum, you're like, maybe I'll just go to Whole Foods and buy my groceries there.
Amazon might say, fine, either way we win.
Right.
But it is a lot. It's just one of these things where, okay, obviously Instacart, we can't really look at the publicly traded. There are no publicly traded direct counterparts, but what does it mean for the rest of the grocery chains? Do they get undercut by this?
Well, what you're finding is that whether it's Kroger or Hannaford, you have other grocery store chains that are trying to compete with Amazon's grocery outlet by saying, we'll do the shopping for you, but we're going to charge you a fee, $5 for us to go through and pick your groceries and have them waiting to be delivered to your car. What's really, I think, fascinating about this is that in places where there's not a lot of competition for grocery stores, Amazon is going to be the competition. Will this end up driving your local neighborhood grocery stores in the Midwest out of business?
Right, or does it just make them at the margin less profitable, less successful, whatever?
Right. Well, that's really the question. Will the prices of your groceries go up? I mean, how does Amazon make this money back? It's hard to make money on food delivery. In fact, Amazon got chased out of the food delivery business. So how do they make money doing this?
Great point. And so it works for them for now while they're building share. But as we've seen time and again, when you have to rationalize it, is it sustainable? Totally changing gears. Let's talk about Juul today because more jobs are in jeopardy there. Sources telling CNBC the company is planning to cut 500 jobs by the end of the year. In a statement, they wouldn't confirm the number, but Juul said they are undergoing a, quote, necessary reset. Juul is also replacing its CFO and a handful of other top execs. And get this, the chief marketing officer is leaving the company. This after they said they'll no longer have a CMO. Last month, they pulled all of their broadcast, print, and digital product advertising in the U.S. So I guess...
Well, if you have no marketing, why do you need a chief marketing officer?
Right. Apparently, you don't. Now, if this is a move for now, obviously they're really trying to placate regulators and everybody who's coming after them saying you've caused all these deaths and this whole thing. And that's is still being worked out, Frank, obviously what's going on there. I read an interesting thing over the weekend, just making the point that in the UK, there's a ton of vaping. They have not had the same problems the US has. And they said a typical vaping product there has about a third of the nicotine as a Juul product. And obviously, a lot of the problems here have been associated with THC as well.
Well, I've spoken to a lot of vaping shop owners. A lot of them call Juul a premium product. It uses nicotine salts. Like you said, it has more nicotine than your average vaping product. But really, I think the thing we have to look at who, I guess, Juul's trying to appease is Altria. It's not parent company, but one of its largest shareholders. Sure. They're reporting earnings on Wednesday. Since the CDC has started investigating deaths and illnesses related to vaping, their stock's fallen just about 20%.
Wow.
So that number right there, for Altria that has a $13 billion investment in Juul, I think they want a lot of changes. They've already placed a former Altria executive as the CEO of Juul, Casey Crosthwaite. So this cleaning house is part of an entire process, definitely to ensure their investment that's already been, the valuation's been lowered from $38 billion down to $24 billion.
Yeah, and cutting its workforce maybe does make sense at a time when on average, it was employing 300 new people every month over the past year. So slimming down its workforce a little bit at a time when it refocuses on these multiple inquiries into the company's role in the rise in teen vaping and a federal investigation that's going into the company. Yeah. So you've got to imagine the type of legal expenses that this company is dealing with. Taking care of marketing and putting it to a rest for now, really, it makes sense.
80% of their sales were on flavored products. So putting a ban on those flavored products has really put a pinch in their bottom line, and how they go about combating that. I don't know how you do that without a serious marketing strategy and without a team to put it in place. But this is what they've chosen to do for now until the FDA comes down one way or the other.
Absolutely. All right, finally today, Netflix is reportedly testing a feature that would allow users to watch content at higher speeds. And this has Hollywood up in arms. Filmmaker Judd Apatow tweeted, "No Netflix, no. Don't make me have to call every director and show creator on earth to fight you on this. Save me time. I will win, but it will take me a lot of time. I don't F with our timing. We give you nice things, leave them as they were intended to be seen." Do you guys ever speed up podcasts?
I was going to say, it is available for podcasts and audiobooks. I think the question is, if you offer this type of feature with live action entertainment, is Netflix effectively tampering with the content and changing the quality of the content, which Hollywood thinks it really is?
I am shocked as many people speed up podcasts as they do, but there is a ton of demand for it. But is there going to be user demand to speed up shows, too?
What does it say about us as a culture that we are so time crunched that we need to hurry through our binge watching?
But I don't even like that. You know, remember how they speed up reruns like Seinfeld on some of the rerun channels so they can jam in more commercials?
No, I had no idea.
I had no idea about
Oh yeah, this is the thing, and it's hard to watch once you notice because you realize you're talking a little bit too quickly. In fact, we thought, well, what would it be like if you sped up Judd Apatow's show on Netflix 1.5 times? Here's what Judd Apatow sounds like now. Take a listen.
This is my level of fame. If I'm walking down the street and somebody says, "Are you Judd Apatow?" If I say no, they go, "All right."
That's him speaking normally. Here's what that would sound like played 50% faster.
This is my level of fame. If I'm walking down the street and somebody says, "Are you Judd Apatow?" If I say no, they go, "All right."
What do we think?
Doesn't work. I'm going to just come out and say it doesn't work. And you know what? One of the things about Netflix is that a lot of creators, content creators, have come there for some creative license and freedom to do what they want. If you give people the option to speed it up, doesn't that take away everything that they're coming to Netflix for? Like, I'm a big fan of Eddie Murphy. He came back to kind of more raunchy comedies, let's just say, with My Name is Dolomite. Would he do the same thing if you could just speed past the jokes?
I don't know, but my main question with this is, do users want it? Because if Netflix has now mentioned this and doesn't do it, and another platform says, well, we'd be happy to take you, we'll do it, right? Like,
all that happens is that Comcast needs or Spectrum needs to add some volume to the speed function on your DVR, and you could just do it yourself. I speed through commercials anyway. You know, this is a way to watch a show much faster. I think I could get a lot more shows under my belt.
The question is, who wins this fight? Is it Netflix or is it Hollywood? I think at a time when the competition is really ramping up, Apple's streaming product coming out on Friday, on the 12th of November, you have Disney Plus. Netflix has to be amenable here. They need that content to stay competitive.
Well, don't listen to us to sped up. That's not going to be good for anybody. Guys, thank you all. Appreciate it. Contessa Brewer, Frank Holland, and Seema Modi. Coming up, from NIMBY to YIMBY. Still with me? People are saying yes in my backyard when it comes to housing developments. A closer look at what's changing their minds and how it could impact your neighborhood ahead.
At Southern New Hampshire University.
It's another Tuesday afternoon, yet another cold day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick to see spectacular coral reefs and white sand beaches. Fly from London Gatwick to Mauritius with British Airways, with flights and 7 nights hotel from just £949 per person. Don't miss out. Book by November the 12th at ba.com/wintersun. With British Airways, incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Cold Tuesday afternoons like this are cruel. You cough, you splutter, so does your car. Its battery dead, killed by an icy claw. Will anyone stand up to winter? Yes, you. Come to Halfords. We fit new batteries on the spot from just £15, and we're open late 7 days a week. See halfords.com for opening hours. Here in Chiswick. Ready for the cold snap? Ready for anything. Halfords, for life's journeys.
Batteries sold separately. Selected vehicles only in most stores.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want crime dramas, I've got loads, and they're never going to guess who did it. football? How about the Premier League? Or how about dramas? I've got Emmy-winning shows. Oh, I know, so fancy. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus, month passes auto-renew, terms apply.
Welcome back to The Exchange. California's utilities had hoped to prevent fires through mandatory blackouts. That clearly didn't work out. So now what? How do you prevent this from happening over and over again? Jane Wells is live in Los Angeles for us with more. Jane?
Hey, Kelly. Yeah, we don't know the cause of this fire yet. I'm up here where they're doing a lot of helicopter drops today on the Getty fire. It's only 5% contained. They're trying to get a handle on it before really, really high winds kick up at around 11 p.m. This is one of the 8 houses destroyed, completely gone. And I just have to tell you, next door is a brand new, just completed, all concrete compound, untouched, on the market for $36 million, which gives you an idea of what this neighborhood is like. Now, this particular area is covered by Los Angeles Department of Water and Power, but it is surrounded outside city limits by Southern California Edison, which is also saying it may have to do more power outages preventively. Edison reports earnings after the bell. But up north, bigger problems. PG&E turned on the power for some people, now saying it's going to have to turn off the power again because of winds. And the governor's insisting on an investigation on whether these outages are being used excessively and whether customers should be charged for power they're not getting. Listen.
PG&E has not been in this position before. We would like them to consider reimbursements, and we're going to be very forceful in advancing that.
Of course, PG&E is in bankruptcy. It reports earnings a week from today, and Evercore has now suspended ratings on the stock and a target price. Its unsecured bonds are trading below par. Evercore warning that potentially the value of the company could go to zero. Kelly?
Jane, thank you. We appreciate it. Jane Wells out in California for us. Tomorrow, Pacific Gas and Electric announcing it could shut off power again, this time to over 600,000 customers, affecting millions more people in total. Let's bring in John Myers. He's Sacramento Bureau Chief for the Los Angeles Times. John, it's good to see you. We're just looking for some answers. How did we get here?
Yeah, I think all Californians are asking that same question, Kelly. I mean, the problem is so complex. In some ways, it's very simple, right? I mean, turning off the power to prevent wildfires, because these strong winds and these fires have knocked over power lines in the past, and that has sparked this very, very dry brush. It's always dry in California this time of the year. It's even drier these days in the climate change universe. But the complexity of what PG&E is up against, its financial pressures that you mentioned just a moment ago, and the technological issues of where they turn off the power. You know, in some of what's been going on over the last several days, there's been a discussion whether they're turning off just the power to individual houses, for example,
right,
or where they're turning off big transmission parts.
Right.
And the governor wants them to be more targeted about it, but that's hard with the way the technology of the company exists, and the company doesn't have the finances, it seems, to do a lot that it needs to do.
Yeah, so John, just in terms of what's changed, you know, these wild, like you said, the winds, you know, the situation here, this is not new to California. Is it because of the drought? Is it because of the weather? Has there been underinvestment by PG&E for decades that's coming home to roost? I mean, why last year and this year has this problem become so bad that it's leading to intentional blackouts to try to stop a problem that it's not even clear that's stopping?
Yeah. Well, I certainly think a couple of things are at play here. First of all, we've had a couple of really dry seasons and a couple of very windy, gusty seasons. That is not, again, historically unusual in California, though it is getting drier and the seasons are lasting longer, as I said a moment ago. I think, too, that you've got a lot of people who are living in these areas between rural areas and I'd say, you know, areas outside of California cities, these wildland interface areas, they're called. And they are in harm's way when these things happen. And then also, too, you know, we have to point out that there has been a lack of investment, as some critics in California have said, by PG&E and other companies, in hardening these systems. They've been asking questions about why didn't you spend the money to put these lines underground years ago when you knew this could be a potential problem? And we don't have a lot of good answers to all this, but I will tell you, I think that Governor Newsom and the state's legislature are going to get engaged a lot more on this in the time to come. But as we've written in the newspaper, right now the utilities are calling the shots They control when they turn the power off, how they turn the power off, and that's frustrating for a lot of
And the
Californians.
legislature's not even in session right now. The governor has basically kind of begged Berkshire Hathaway to come in and buy this utility. Bernie Sanders has said it should be taken over by taxpayers, which is something we've heard now from multiple different places. But even if so, we're talking about billions of dollars of investment that need to happen. So taxpayers are going to be on the hook for that if it is taken over by the state. And if not, in order to pay for the upgrades that it sound like need to happen here, doesn't that mean that the bills, power bills for Californians, which already have housing adjusted the highest poverty rate in the nation, those bills are going up, aren't they?
I think ratepayers are going to see a lot of this, and I think taxpayers are going to be part of that question. There are ideas to floating statewide bonds that would help pay for part of it. It's complicated, and as you know, there's obviously a huge financial element, but there's a huge political element here. And I think Newsom, who has been in office for 8 months, realizes what he has got in front of him, and it is not going to be easy, and it's not going to end anytime soon.
John, thanks very much. Appreciate your perspective on this. We'll check back in with you as this plays out.
Thank you.
John Myers is the Sacramento bureau chief for the Los Angeles Times. Coming up, it was a star-studded event, but Apple's much-hyped morning show falling flat with the critics. How big of a problem could it become for Apple as the content wars heat up? That's right after this.
This is the investing book everyone is talking about. It's called...
It's another Tuesday afternoon, yet another cold day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and enjoy stunning white sand and crystal blue sea. Fly from London Gatwick to the Maldives with British Airways from £300 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Hello? This is Dustin. I found something. Is anybody there?
We hear you, Dustin. With Sky Q, you can easily catch up on epic Netflix shows like Stranger Things and then watch award-winning Sky originals like Chernobyl. Get Sky and Netflix all in one place on Sky Q for one surprisingly low price. Just £25 a month. Visit sky.com and join today. Offer ends November 14th. 18-month minimum terms. Prices may change during contract. Requires Sky Q box connected to broadband. Set up from £20. Further terms apply.
Hey, you. Yes, you. We didn't make Nature Valley nut butter biscuits so you could just sit and munch them on the train.
Not when there's a whole forest out here to explore. Isn't that right? Go get it!
Delicious whole grain biscuits with a real nut butter filling. Nature Valley Nut Butter Biscuits. Get out more.
NFL fans, hear every live game on TuneIn Premium.
Toss to the right, throws to the end zone, caught by Fells!
15, 10, 5, touchdown, Green Bay!
This Thursday on Halloween night, hear the home and away call as the San Francisco 49ers visit the Arizona Cardinals at 8:20 p.m. Eastern.
Back, what a block! Touchdown for Kevin Coleman going the other way! Touchdown!
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Welcome back to The Exchange. It was a big night for Apple yesterday as the company premiered its highly anticipated program, The Morning Show, during a big red carpet event in New York's Lincoln Center. But critics aren't very impressed with the show. Rolling Stone saying it rises but doesn't shine. Variety says it gives up on its potential. CNN saying feel safe to hit the snooze button, and Vanity Fair calling it contemporary babble. Julia Borston joins me live from Los Angeles. Julia, this is the marquee program for the new service Friday. How much of a setback is this?
Well, look, I have to say I have not seen this show yet, though I did see another one of the shows on Apple TV Plus. It's called For All Mankind, about astronauts. And there are 4 shows that have gotten reviews have had reviews come out yet ahead of Apple TV Plus launching on Friday. And the ones about the morning show were definitely not positive. On Rotten Tomatoes, the score was in the green, as they say. It was like a 58% on Rotten Tomatoes. But the reviews of the show I saw were better. So I do think that there is some element of reviews being mixed. But this is not the rave reviews that Apple certainly was hoping for when they hired such big stars such as Reese Witherspoon and Jennifer Aniston to star in this show. But I think it'll be really interesting to see what happens once people who have a free trial, because remember, at first Apple's not asking people to pay, but if you have a 7-day free trial or if you buy a new Apple device, you get a year for free, what people think not just of this show, but of the dozen shows on the service. So I think I would not count out Apple just yet. It's still early days for them. And even though they might have liked to have a bigger splash right out of the gate, they do have a while to get people on board.
Yeah, and even with the bad reviews, they say there's no such thing as bad publicity, so maybe it could help in a weird way. Julia, thanks very much. Julia Borson in L.A. We've got a news alert on the NCAA. Eric Chemi, what is happening?
That's right, Kelly. So the NCAA just issuing a press release saying that its Board of Governors is actually going to open the door now for its players to get paid. So they're going to start the process to enhance the name, image, and likeness opportunities. Remember, this is not getting paid from the college directly, but allowing athletes to get paid from outside external sources. Again, this is just the first step in what will take months, maybe a year and a half. They want these rules in by no later than January 2021 for each of the 3 NCAA divisions. So this is the first step, but it is a big step because remember, the NCAA had been pretty adamant that they did not want college players getting paid, and now they're saying, look, we understand the rules have changed, laws like in California have changed, congressmen have tried to put together new bills, we're going to go ahead and let this happen and watch for specific rules to actually come in the next few months. Kelly, back to you.
This is a huge U-turn. I can't imagine the ramifications. I don't even know where to begin, Eric. I mean,
you could have gotten paid when you were playing lacrosse.
Yeah, I don't think I would have collected much for that, but it's true. Everyone from Division 1 right down to D3, and you think that they're saying this could happen within about 18 months' time?
They're saying they want rules to get put in immediately, but no later than January 2021, and they're still going to have the working group of this board of directors will have its gathering feedback period at least through April, so that's still 6 more months to go. So again, it's the first step in a process, but the fact that they're even allowing this to happen, that's the big U-turn.
Wow, and like you said, a clear response to what was happening in California. Eric, thanks very much, Eric Chemi. Coming up, from not in my backyard to go right ahead, a housing affordability crisis is having people change their tune in certain parts of the country. We'll explain next.
It's another Tuesday afternoon, yet another cold day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick to see spectacular coral reefs and white sand beaches. Fly from London Gatwick to Mauritius with British Airways, with flights and 7 nights hotel from just £949 per person. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Cold Tuesday afternoons like this are cruel. You cough, you splutter, so does your car. Its battery dead, killed by an icy claw. Will anyone stand up to winter? Yes, you. Come to Halfords. We fit new batteries on the spot from just £15, and we're open late 7 days a week. See halfords.com for opening hours. Here in Chiswick. Ready for the cold snap? Ready for anything. Halfords, for life's journeys.
Batteries sold separately. Selected vehicles only in most stores.
Hello? This is Dustin. I found something. Is anybody there?
We hear you, Dustin. With Sky Q, you can easily catch up on epic Netflix shows like Stranger Things and then watch award-winning Sky originals like Chernobyl. Get Sky and Netflix all in one place on Sky Q for one surprisingly low price. Just £25 a month. Visit sky.com and join today. Offer ends November 14th. 18-month minimum terms. Prices may change during contract. Requires Sky Q box connected to broadband. Set up from £20. Further terms apply.
Swinging a long drive, left field. He's got one now. Kurt Suzuki gives the Nationals the lead.
The excitement of the Fall Classic is here, and you can hear every call of the 2019 World Series on TuneIn Premium. The action continues tonight with Game 6 between the NL champion Washington Nationals and American League champion Houston Astros. Listen live at 8 Eastern as two of Major League Baseball's most storied franchises look to bring home the World Series title. The 2019 World Series is on TuneIn Premium. NFL fans, hear every live game on TuneIn Premium.
Toss to the right, throws to the end zone, caught by Fells,
15, 10-5, touchdown Green Bay!
This Thursday on Halloween night, hear the home and away call as the San Francisco 49ers visit the Arizona Cardinals at 8:20 p.m. Eastern.
Back, what a block! Touchdown for Tevin Coleman going the other way! Touchdown!
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Welcome back. America's housing shortage seems to be getting worse, with realtors saying that plus high prices are holding back home sales. It's even fueling an emerging movement that's saying yes in my backyard to multifamily dwellings on single-family lots and broader support for affordable housing. With me now to take a closer look at this quote-unquote YIMBY movement is Kim Hart. She's a managing editor over at Axios. Kim, is this just a kind of San Francisco phenomenon, or is this something that's happening nationwide?
That's a great question, Kelly. This really started in San Francisco. That was where really ground zero for skyrocketing home prices since the Great Recession. And that's where, to buy a median home or buy a home in San Francisco, the median price is about $1.7 million. If you're looking at the greater Bay Area, that's still close to $1 million. And so people who are making even six-figure salaries at major tech companies and doing quite well by most standards across the country are still having a really hard time affording a basic one-bedroom, two-bedroom house. And as you see the supply and the demand just be completely out of whack, you're starting to see more and more people say, well, you know what? The answer to this is to increase the supply to help meet that demand. And we have to build more houses and we have to build more units beyond single-family houses.
San Francisco and that whole Bay Area is a little unique because it is sort of physically land constrained. There's a host of other reasons for this as well. And traditionally people have moved to just second-tier cities that are more affordable, have more availability. Do you see, but we saw Minneapolis, for example, saying it was going the way of pushing multifamily housing over single-family housing, and that was, I believe, was last summer. What is driving this in other parts of the country? Is it coming to most single-family neighborhoods?
It really, the pressures on housing is not just limited to the coastal cities, which is what we've heard for many years. As people move out of those coastal cities and looking for more affordable places to live, those places that were more affordable are also becoming less affordable. So you're seeing places like Minneapolis. As you said, Minneapolis was the first city in the country to do away with single-family zoning altogether, and really to make way for not the 20-unit, the 30-unit kind of housing, but really the duplexes, the triplexes, ways to get more density within neighborhoods that have typically been single-family houses with big yards, as just a way to make it more affordable for normal families, especially people who were just starting out. Starter homes across the country are becoming much further out of reach.
So we've noticed that the attitudes are shifting towards more of a pro-development, especially among younger people who want to get in that housing. But what about the older generations who are afraid that their views are going to get blocked or whatever, or that their home prices might fall?
That's exactly right. You really are seeing this conflict and clash between the NIMBYs, the no, not in my backyard when it comes to more housing development, and the YIMBYs, who are typically on the younger side, who are saying, I can't afford to live anywhere. We have to change this, or everyone's going to be priced out and have to move further and further and further away from jobs. Transportation can't support that, and it just kind of spirals downward from there. The amenities that people are trying to get to cities are no longer worth it for people, and that's a big problem for city leaders as well. So I think this constant debate over whether development is good. Does it actually lead to gentrification? Does it lead to displacement? And then I think the YIMBYs are looking at, well, how can we find ways to decrease that?
Sorry to cut you off, Kim, but we have to leave it there. Thank you so much, Kim Hart from Axios. That does it for The Exchange. Power Lunch starts now.
We'll see you in just a moment, Kelly. I'm Melissa Lee. Here's what's new at 2 on Power Lunch. We are just 24 hours away from the Fed decision tomorrow, with stocks at record highs as Fed Chair Jerome Powell doomed to disappoint the markets. Plus, Muhlenberg's mea culpa, the Boeing CEO testifying in front of the Senate today about the safety of the 737 MAX. We've got all the details. And later, Grubhub's failure to deliver. Shares are cratering, down 40%. Wall Street abandoning this stock after its latest earnings report. A top analyst explains why he is waving the white flag. Power Lunch starts right now. Let's take a look at where we stand with the markets here. The S&P 500 actually notched a fresh record high earlier in the session. The Dow is also higher, but still about 1% away from its all-time highs, now up just about 0.03%, while the Nasdaq is in the red, dragged down by shares of Alphabet after its earnings report last night. Kelly.
Melissa, thanks. We are less than 24 hours from the Fed's latest decision on interest rates. Another rate cut is expected. Steve Leisman is looking at that and a key issue that is troubling the Fed in the CNBC Fed survey.
Yeah, the Fed and the markets. Kelly, let's take a look first at what the expectations are, and then we'll get into that issue, which I think you know what that issue is. 25 basis point cut is expected. 79%. It's a little bit on the low side for some meetings we have, but it is a clear and strong majority expecting that rate cut. But the next one, not expected till February 2020, just 37% thinking the Fed will cut in December, which is to say a strong majority does not believe there'll be a cut and is banking on a pause. And the median funds rate through 2020, 1.4%. So there's sort of kind of one more cut built in after October at some time. Part of the issue right now, the odds of recession kicking up to an 11-year high at 34%. And part of the issue right there, well, there's only one issue, trade. Trade is a big deal, according to the 43 respondents to the CNBC Fed survey. 76% believe they have raised consumer prices. 60% of respondents have reduced their growth this year and next because of tariffs. And then 46% say it's led to lower consumer spending. But optimism about a deal yet again. 83% think that China and the U.S. will sign a limited deal. Nobody thinks a comprehensive deal is coming, which is what they thought was coming before. And 17% don't believe there's going to be any deal at all. I will point out, guys, that number 80% was what they thought about a comprehensive deal twice before. So we'll see. And there were some headlines today, thrice burned, I guess is where we're headed right now, if there is no deal in Chile when Xi and Trump meet.
Well, the officials say that just because there may not be a deal signed in Chile doesn't mean that there won't be a deal, that phase one could be just signed at a later date. But still, all these go to show, and you're laughing at that, because it's a little bit of kicking the can down the road.
What I'm really laughing at is the way the market keeps believing this is going to happen. You know, and they may be right. And I guess it's expensive to not bank on it happening,
but that gives the Fed some leeway to give a hawkish cut tomorrow.
It depends on where you sit, kind of determines where you stand on is it hawkish or dovish. What I think they're going to say is we've done what we kind of set out to do, which was to provide serious easing to the market. They did that by getting rid of the rate hikes they were going to build in. Mm-hmm. They got rid of the balance sheet reduction, actually began growing the balance sheet, and then they provided rate cuts. To the Fed's view, there's a lot of stimulus or easing in train. And they may want to wait to see how that affects the economy. So I think the message is going to be meeting by meeting. Not that you may think of that as hawkish. The Fed, I think Powell is going to strive for a very neutral tone here because I think that's where he is, and I think that's where his committee is.
All right. Steve, thank you. Pleasure. Steve Leisman. With the Fed decision looming, the S&P 500 once again hitting an all-time high, driven higher by earnings. But halfway through the season, the picture isn't entirely rosy. Bob Pisani's got that story from the New York Stock Exchange. Hey, Bob.
Hello, Melissa. So it's really two stories. One, U.S. consumer doing great. Global cyclicals in, not so great. Just take a look on the consumer side. Look at MasterCard. Great numbers. Same thing that happened with Visa, essentially. Their guidance for the full year, terrific. About 15% revenue growth. That's terrific. We heard Capital One say something very similar. So there's the consumer holding up very well. MasterCard's been a great mover this year. Then you got the cyclicals. Look today, lower guidance from some of the big global and cyclical names like Eaton, which is a big global power management company. They lowered their numbers. Cummins, obviously, diesel engine company. They're about 10% of their revenues in China. They lowered their truck production numbers. GM largely on the strike issues, but also a little bit on China, but that's been weak for all the year. This is not the case with consumer staples and the healthcare stocks. Their earnings commentary has been generally very well. We're not seeing reductions. So where are we? What's going on? The halfway through an earnings season, the good news is the consumer is strong, and that's the engine of global growth. That's why we're holding up so well. The bad news is estimates for the cyclicals and industrials and material stocks have been coming down. Energy has been a complete disaster in the last few weeks, dramatically coming down. Where else are we getting complaints from? There's not a lot of volume. Guys, we're at new highs, and it's shockingly light volume. For equities, for ETFs, for futures, for options, everything. There seems to be a lack of conviction as we're at here at new highs. We're not getting enthusiastic buying. It's sort of a lack of selling that's driving the prices up. And remember, folks, right now, the market is expensive if you look at the 2020 numbers overall. SPY today, I'll give you an estimate here. SPY normally would do 70 million shares a day, 80 million shares. Look at the volume here, 28 million shares in the middle of the day. That's what I'm talking about. Not a lot of conviction. Guys, back to you.
Weird, Bob. Thank you very much. Bob Bassani. With earnings on shaky ground and the Fed decision looming, which maybe the market's also waiting for, can this rally keep going? Let's bring in Ryan Dietrich. He's senior market strategist with LPL Financial, and Brent Schutte is chief investment strategist with Northwestern Mutual Wealth Management. Great to have you both here. Ryan, I think you had pointed out that yesterday is the best day of the year typically for stocks, right? Why was there anything more you can glean from that, from this seasonally strong period of time typically?
Well, Kelly, first off, thanks for having me back. But really, I think it's just the fact we're out of the worst 6 months of the year and we're entering the best 6 months of the year. I mean, November through April is up 7% on average historically. It's up 9 of the last 10 times. So the calendar really is in people's favor. One other thing about seasonality, there's a good chance we're going to be up 20% for the year as of the end of October with a couple of days to go here. November since 1950 has been higher 7 of the last 7 times it's happened. December up 6 of the last 7 times. Some really good outperformance. So yes, this has been a great year. Sometimes great years can continue stronger in the last couple of months, and that could be where we're looking at things once again here.
Brent, all the year-to-date numbers, the S&P's performance, every stock that might be named, you got to take it with a grain of salt. I mean, we hit the market bottom, a couple of days before the calendar happened to turn. You look at the 52-week highs for a lot of these names; it's a totally different story for the FANG and in other companies, for instance. What do you think is really going on here?
So I really think that if we do hit new highs towards the end of the year, which we think we will, it's going to be driven by a different cast of characters. And so all this talk about market highs, they've really been driven by the defensives. So if you look from about October of last year, which is important because that's when Jerome Powell made people worried that he was going to hike the economy into recession, all the market highs have been defensive. Staples, utilities, REITs, minimum volatility stocks. If we're right and the Fed has pivoted, which now will begin pushing into the economy because it takes with a lag, and the trade war comes off, I think the formula going forward is much different. It's more cyclicals, it's more value, it's even perhaps more global stocks since global LEI has actually shifted higher. And so new highs, but different players.
So, Brian, basically you agree. I mean, we were having this discussion with Steve Leisman. He was saying there was a lag in terms of monetary policy, and that all that easing that the Fed had been working on is eventually going to come out into the economy, and that's where you stand. So you're shifting more towards a cyclical tilt at this point?
Yeah, I mean, certainly there's always a caveat about political uncertainty, but I do think it's an election year, and I think the president would like to get reelected. So a recession is something I don't think he'd want to push. And so that's the big caveat. But indeed, if you look, it's not just the Fed, it's other central banks. And so China was a country that was tightening policy coming into 2018. They got hit with surprise tariffs. Now they've been easing, and China's OECD LEI is actually ticking a bit higher. And so if those things continue to turn, which we think they will, then the narrative going forward is not defensive. It's probably more cyclical in nature because LEIs will shift higher and growth will improve.
So you like small caps, value stocks, international, and also commodities at this point?
Yeah, I mean, commodities are more so the inflation. If you look at the inflation component over the last year, while bond yields have gone down by 150 basis points, inflation hasn't moved. A year ago today, core PCE was 1.86. Today it's 1.77. And so at the end of the day, before a cycle ends, we do believe you have to have some sort of inflation with the Federal Reserve desiring to actually end the cycle. And right now, we do have a little bit of inflation, not much, but no central bank that wants to end it right now. And so inflation could tick higher before they do something, which indeed would probably lead to a commodity outperformance, especially if growth improves and the dollar weakens.
All right. Brent, appreciate it. Thanks very much, Brent Schutte and Ryan Dietrich. Thank you.
Well, Boeing CEO Dennis Muhlenberg testifying in front of the Senate committee today about Boeing safety procedures. Phil LeBeau's joining us now with all the fireworks. Phil.
And Melissa, we're not going to show you all of what the senators had to say, but it's safe to say that Dennis Muhlenberg was blasted today by a number of senators. And if there was a theme that they continually came back to, it was the idea that they don't believe Boeing has been totally on the up and up, not only with regulators, but with the public about the 737 MAX.
You have told this committee and you've told me half-truths over and over again, including in that meeting. This is why I am so upset. You've not told us the whole truth, and these families are suffering because of it.
When Boeing came to us and they said it's the pilot, inexperienced pilots, you were lying to us as well.
Senator, if I could try to respond to your question. First of all, the premise that we would lie or conceal is just not consistent with our values.
Dennis Muhlenberg was grilled for about 2.5 hours before the Senate Commerce Committee, and he's not done on Capitol Hill. He will be back tomorrow testifying in front of a House committee, and there are going to be some tough questions there as well. Today, perhaps one of the more stirring moments was when the victims, families of those who were victims in the Lion Air and Ethiopia Airlines crashes were asked to stand up and hold up pictures of their relatives who died in those two plane crashes. You can't really see it here, but I was watching from the gallery. Dennis Muhlenberg turned around. He saw those pictures. He did not duck. He did not say, I'm not going to turn around and look at these family members. But that was certainly one of the more stirring moments. And you see Dennis Muhlenberg did turn around and look at the pictures, and then he came back and answered more questions. So, guys, a rough day for Boeing. You wouldn't know it from the shares, but it was a rough day for Boeing and for CEO Dennis Muhlenberg.
He was also asked, Phil, whether or not he would step down, correct? He sort of dodged that question.
Yeah, before he went into the hearing, we asked him point blank if he thinks that he should remain as CEO. He said, I'm not thinking about that. I'm thinking only about getting the 737 MAX certified and then back in the air.
Phil, thanks. Phil LeBeau in Washington. We've got a news alert on Sony's streaming service right now. Let's head over to Julia Borston in Los Angeles with the details. Julia.
Melissa, this is a casualty of the streaming wars. Sony's PlayStation Vue, that's the company's live TV subscription service, will shut down on January 30th. This internet TV bundle, which starts at $50 a month, has been tied into the PlayStation game console and is the smallest of all the major OTT services, reportedly with just about 500,000 subscribers. Sony saying, quote, unfortunately, the highly competitive pay TV industry with expensive content and network deals has been slower to change than we expected. Sony saying it's now focusing on its core gaming business. Kelly, back over to you.
Okay, Julia, thanks very much. Julia Borston. Coming up here on Power Lunch, promiscuous diners. That's who Grubhub is blaming for its huge earnings miss. It's taking the stock down 40% today. Up next, we'll talk to an analyst who just double downgraded the stock. We're delivering more Power Lunch after this.
Fed Survey is sponsored by JP Morgan Asset Management, building stronger portfolios to meet real client needs.
Yesterday, I switched jobs and lost my vision benefits. But thanks to my VSP individual vision plan, I'm back to saving on eye exams and glasses. Get an extra $20 to spend on featured frame brands when you enroll today at vspdirect.com.
The S&P 500, the benchmark for most U.S. equity investors. Only Sector Spider ETFs can divide the S&P 500 into 11 investable pieces. This allows you to underweight and also overweight sectors to best meet your clients' objectives. Sector Spiders, write your next chapter in investing. Before investing, consider the fund's investment objectives, risks, charges, and expenses. Go to sectorspiders.com for a prospectus containing this information. Read it carefully. Looking for the best cashback cards? Introducing CNBC Select, the authority on all things credit cards. We do the research, you reap the rewards. Head on over to cnbc.com/select and take control of your money.
Universal Studios Halloween Horror Nights featuring Jordan Peele's Us and more.
Hi, I'm Hanno. I created Gabi because most people overpay on car insurance. Gabi is a free tool that saves you money by finding the best deal. Gabi users save more than $800 per year on average. Go to Gabi.com and stop overpaying for car insurance.
When it's time to sell your home,
there's a lot of money on the line. How can you trust your real estate agent will get it right? There's good news. With HomeLight, you can compare actual performance data on thousands of agents near you, so you know who sells quickly, who sells for the best price. We'll match you with the perfect agent for your needs. And best of all, it's free. Sell your home for more money. Go to HomeLight.com today.
Hi, I'm Hanno. I created Gabi because most people overpay on car insurance. Gabi is a free tool that saves you money by finding the best deal. Gabi users save more than $800 per year on average. Go to Gabi.com and stop overpaying for car insurance.
Look at that decline of more than 41%. Grubhub is on pace, in fact, for its worst day ever. Following weak quarterly results, the CEO blaming what he called promiscuous diners. Watch what Mad Money's Jim Cramer said about those comments earlier today.
The thing that they're up against private companies that are playing with free money. And that's exactly what DoorDash is, what Postmates is. So I feel bad for them. I mean, Maloney's got his hands full, but promiscuous, it really is true. Do you really care who delivers your food? They have locked up all the big chains, but it doesn't matter. There's no loyalty. There is no loyalty in that business, and that's why the diners are promiscuous. Why did he have to pick that word? That word is basically saying, please don't touch our stock.
So is the delivery space becoming too congested for Grubhub? Oppenheimer says yes, downgrading the stock to an underperform all the way from an outperform and slashing the price target. With us now, the analyst behind that call, Jason Helfstein. Jason, great to have you with us.
Thanks.
You're not the only analyst on the street who's had to basically double downgrade the stock in a single day. I'm wondering, going into the quarter, what do you think was the biggest thing that you missed?
Yeah, it's really that frequency, the amount of time the existing diners were ordering from Grubhub declined. So we already knew they were losing market share to DoorDash, Uber, and others. There's publicly available download data. Their share went from kind of give or take around 25% of downloads in the fourth quarter. They were under 20% in this quarter. And so I think investors were okay with, on the incremental customer, they just weren't going to see as many, right? Or it was going to cost more. But what the street really missed, including ourselves, was that all of the innovation that the competitors have done with their product, and we can talk about that, is finally hitting Grubhub.
Mm-hmm. Did you think that it wouldn't hit Grubhub eventually? Things like loyalty programs, memberships. I mean, was that not going to catch up?
They have their version of a loyalty program. I don't think it's as aggressive as what Uber could offer. Again, up to this point, you've seen a high amount of loyalty, particularly in the big cities, right? And remember, where Grubhub does differentiate themselves is they have all the independent restaurants. Restaurants who historically hadn't had their own delivery. And remember, it costs the restaurants more to use third-party delivery, right? And so Grubhub kind of, to some extent, own that. And while we are seeing the competitors trying to move into that, really, if you track that, we hadn't crossed over. And, really, so that's what it is. So the bottom line is, when you look at the company now and you say, well, what is a diner worth? They're worth way less to the company than we all thought, and we had to factor that into the valuation of the stock.
They had a 10-page shareholder letter listing a lot of different things that they could do, adding unpartnered restaurants, for instance. They also said that the industry growth was slower. I'm just wondering, do you see a way out for Grubhub here, or is what you thought the business model was maybe 24 hours ago, does it no longer exist?
There's definitely a business model here. You can make money at it. If the company's goal was to make $1.50 of cash flow per order, I think that is not going to happen. Maybe it's 50 cents, maybe it's 70 cents, right? So if you think about it, right, the credit card industry charges 2% per transaction, makes a ton of money. Square, right, charges even less than that. So the idea is, if you're seeing your effectively take rate come down, or your kind of profit per order come down, how do you make money? You have to do a whole lot more orders. And the issue is that they're, as you alluded to, they're competing with companies who have much deeper pockets. And I think if you stack them up against other internet marketplaces that we look at, the company has the lowest net cash balance as any other. Well, there's one other who's pretty similar, but they're just not prepared to take on these other companies. And it looked like they were doing okay, and they're not anymore. And most likely, they're probably going to have to sell or merge with another company to try to get better shared scale. We'll see what happens. Right now, Uber can offer rides and food loyalty. You have Lyft, right, that has a rides business, so maybe they want to potentially do that. There are other food delivery companies that could use the customer base that Uber has or that Grubhub has, as well as all the independent restaurants. So we do think there's value, but not at this stock price.
All right. Jason, thanks for your time. Appreciate it. Jason Helstein.
And in less than 24 hours, we will hear the Fed's decision on interest rates. Another cut is expected. We'll look at how low rates are juicing the housing market and how long those gains can last. Plus, a major shakeup in college sports. Those details, which we just learned in the past hour or so, when Power Lunch returns.
Flight number 417 is...
London. Switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
You're a small business owner, and there's nothing small about what you do. That's why Dell Small Business Technology Advisors give you trusted advice and tailored tech solutions, like computers with Intel Core processors, servers, storage, and networking, plus industry-leading monitors and software. No matter your technology needs, Dell is here to help your small business do big things. Call 0800 085 4878 to speak with an advisor today. That's 0800 085 4878.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want crime dramas, I've got loads, and they're never going to guess who did it. Dramas, I've got all the big shows from Sky Atlantic. Or how about reality TV? I can fill that island-shaped hole. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus, month passes auto-renew, terms apply.
Watford. There's nothing like coming back to a warm home after a long day at work, especially when you've been stuck at a cold train station in rush hour for what seems like an eternity. Luckily, with Hive Active Heating, rated 5-star on Trustpilot, you can turn your heating on from wherever you are. And now with our new Hive radiator valves, you can even control your heating room by room. Search Hive Heating to buy now. Hive services require broadband and Wi-Fi. Terms apply.
Swinging a long drive, left field. He's got one now. Kurt Suzuki gives the Nationals the lead.
The excitement of the Fall Classic is here, and you can hear every call of the 2019 World Series on TuneIn Premium. The action continues tonight with Game 6 between the NL champion Washington Nationals and American League champion Houston Astros. Listen live at 8 Eastern as two of Major League Baseball's most storied franchises look to bring home the World Series title. The 2019 World Series is on TuneIn Premium. NFL fans, hear every live game on TuneIn Premium.
Toss to the right, throws to the end zone, caught by Fells. 15, 10, 5, touchdown, Green Bay.
This Thursday on Halloween night, hear the home and away call as the San Francisco 49ers visit the Arizona Cardinals at 8:20 p.m. Eastern.
Back, what a block! Touchdown for Tevin Coleman going the other way. Touchdown!
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Welcome back to Power Lunch. I'm Mike Santoli at the New York Stock Exchange. As the Fed gets ready to make its big rate cut decision tomorrow, one of our next guests sees a warning sign flashing in the bond market. Let's bring in your Trading Nation team today, Matt Maley of Miller Tabak and Gina Sanchez of Chantico Global. So, Matt, Treasury yields, let's say the 10-year, it's lifted nicely off those August lows, been kind of hovering right around 1.8, a little more than that for now. Where do you see it headed next?
Well, I mean, the key level that we're looking at, because it's a very critical juncture here, is 1.9%. It's it's just a little above, just below that level right now. But the reason why that's important is that's 1.9% is where the trend line going all the way back a full year comes in, and it's also the September high. So in other words, any kind of meaningful move above that level will give it take it above that trend line and give it its first higher low, higher high sequence in over a year. That doesn't mean interest rates are going to skyrocket to the 3 or 4% that people were talking about a year and a half ago. But if it gets above 2% and holds there, that has implications for the bond market, but also for the stock market as well. I mean, let's face it, banks are cheap and looking for higher rates to help them move higher, and utility stocks are expensive, and higher rates will hurt that group. So it could cause a rotation in that market. So it's an important juncture for a couple of different markets right now.
Yeah, it was late July when that yield first kind of cracked below 2% in a pretty dramatic way, and it put risk markets on their heels. They've recovered since then, Gina. But I guess, with the Fed cutting perhaps one more time and then going on hold, does that mean that bonds could be stable for a while, or do you think there's risk?
Well, I think obviously the 10-year has been kinked because there's been a ton of safe haven trading into it, and so a lot of it is just that you got your flextension on Brexit, you have a tariff temporary agreement or current agreement, you have an extension of the tariffs, so all of those things actually relieve the pressure on the 10-year, so it can come back up to a more normal level consistent with the rest of the yield curve. And so really what we have to hear is whether or not Powell signals that this is the end of the mid-cycle correction. If so, I think you're going to have a lot more upward pressure on the 10-year. And that not only affects the bank sector, the utility sector, but I would argue that it also affects high-yield credit and high-grade credit.
Affect them in a negative way?
Potentially, yes, because you're going to see some widening.
Yeah, certainly it would put upward pressure on their yields. We'll see how it goes. Right now, the market seems pretty steady heading into that rate decision, which we'll get in about 24 hours. For more Trading Nation, head to our website or follow us on Twitter @TradingNation. Melissa, back over to you.
Thank you, Mike. Ahead on Power Lunch, low rates boosting home sales, but is the high end for home builders? We'll ask one analyst whether these stocks will hit a wall. Plus, marijuana on the menu. Canada's pot industry expected to be worth nearly $4 billion next year. Why consumable cannabis products could be what fires up growth. And a college sports shakeup in a major shift. The NCAA Board of Governors will now allow college athletes to receive compensation for use of their likeness. Those details when Power Lunch returns.
And now, the latest from TradingNation.cnbc.com and a word from our sponsor.
There's a classic investment thesis called the Dow theory. It says that transportation stocks can either confirm or deny a broader market trend. But it's important to remember that transports can be sensitive to changes in oil prices and other market influences. So don't rely exclusively on this theory when making an investment decision. I'm Randy Frederick, and Schwab is the better place for traders.
So Schwab, tell me about four-legged option strategies.
It's another Tuesday evening, yet another cold day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and relax with 365 beautiful beaches.
So what would you like to have?
Fly from London Gatwick to Antigua with British Airways from £223 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Fall in love with the brand new iPhone 11 at Tesco Mobile. Take amazing photos with Apple's best ever ultra-wide lens camera. You can get the iPhone 11 for just $37.75 a month with no additional upfront costs. What's not to love? Search Tesco Mobile or visit us in store. Tesco Mobile. Every little helps.
36-month credit agreement, rolling monthly usage contract. Subject to status, phase policy applies. See tescomobile.com/terms.
What can you get from Tesco for £1 each this Halloween?
A pumpkin.
More.
A spooky pumpkin cup.
More.
Ghostly balloons. Spine-tingling spider webs. Ghoulish plates and napkins.
More. Yes, it is scary what you can get for just £1 each this Halloween.
Tesco. Every little helps. Available in selected larger stores.
Hey, you. Yes, you. We didn't make Nature Valley nut butter biscuits so you could just sit and munch them on the train. Not when there's a whole forest out here to explore. Isn't that right? Go get it!
Delicious whole grain biscuits with a real nut butter filling. Nature Valley Nut Butter Biscuits. Get out more.
With the new Halifax Family Boost mortgage, children can get help to buy their first home, and mum and dad earn interest on their savings. Everyone's a winner. The new Halifax Family Boost mortgage. Halifax makes it happen.
Your home and savings could be at risk if mortgage repayments are not maintained. Only available in England and Wales. One applicant must hold a Halifax Reward or Ultimate Reward current account. Conditions and exclusions apply.
Welcome back, everyone. I'm Sue Herrera. Here is your CNBC News update at this hour. Vice President Pence viewing training exercises at Fort Hood. He watched a live fire demonstration at the Texas Army base involving M1A2 Abrams tanks. He was also scheduled to speak to soldiers and civilian personnel. A federal judge blocking Alabama's efforts to ban nearly all abortions, ruling the state's law criminalizing most abortions is unconstitutional. Governor Kay Ivey signed the bill into law in May. It was set to take effect next month. A powerful earthquake shook the southern Philippines, killing one person, injuring dozens, and sending people dashing out of their homes and buildings in a region that is still recovering from recent strong quakes. The 6.6 magnitude quake was caused by movement in a local fault. And Prince Harry presenting Britain's Invictus Games team, a 65-member squad of service personnel and military veterans who will compete in the Netherlands next May. The Invictus Games, founded by Harry in 2013, is an international Paralympic-style multi-sport event for injured war veterans. You are up to date. That's the news update this hour. Melissa, I'll send it back to you.
Sue, thank you very much. Let's take a check on the markets right now. Remember, we did hit a record intraday high on the S&P 500 earlier in the session. We're now off that high by about 7 points. 3040 is your level, up by just 1 point. The Dow is up by 2 points. The Nasdaq, meantime, is down by 0.4%.
Time now for today's power movers. How about shares of Beyond Meat? They are tanking today, about 65% lower from their all-time high right now. They're down 20% on the session. The company posted a bigger than expected profit and raised guidance, but investors and insiders are bailing as its IPO lockup period expires today. And General Motors is rising after posting results that easily topped Wall Street's estimates, but the company warned it'll take a $3 billion hit because of the UAW strike. Its shares up 5.5% now. And we end with two big drug makers, Pfizer and Merck. Both companies beating on earnings, and their combined gains are adding about 30 points to the Dow today. We would be lower without them.
We've got a news alert, meantime, on Fiat Chrysler. Let's get to Phil LeBeau for all the details. Phil.
Melissa, Dow Jones reporting that Fiat Chrysler is in discussions about a possible combination with PSA Peugeot. That would be a combination that essentially, if these two companies were to get together, you're looking at about 4 million vehicles in annual sales worldwide. Peugeot's dominance, so to speak, is mainly in Europe. They also have large exposure in China and parts of Asia. Fiat Chrysler, as you're well aware, has a big exposure here in North America with the Jeep and the Ram brands, but also has exposure somewhat in Asia. Guys, this would be an interesting combination. It would create a $50 billion automaker and certainly give both companies the kind of size and scale that they would be looking for. We have reached out for a comment from Fiat Chrysler as well as from Peugeot. We have not heard anything, but don't be surprised, guys, that this talk is going to start to heat up because many people believe the auto industry is ripe for consolidation, and we know that Fiat Chrysler was previously looking at a possible combination with Renault. That ultimately fell apart last year. Guys?
Chrysler has been in talks so many times, Phil. I'm sure you can't even keep track anymore. Do you think that this could run into any sort of resistance by antitrust officials in Europe?
No, not at first blush. I think, look, John Elkann is looking to make a deal at some point if it's the right deal. And it really the best options were Renault and Peugeot. And when the Renault talks came up last year, people said, well, what about Peugeot? Well, now we're starting to see that might be a possibility.
All right, Phil, thank you.
You bet.
Phil LeBeau with the news there. Now to a major shift in college sports. The NCAA will start to allow athletes to be compensated for their names, images, and likenesses. This according to the organization's Board of Governors. Here to explain, Eric Chemi and Jabari Young both join us. And Eric, this news just broke. It's out of a Board of Governors meeting that they're having?
The NCAA Board of Governors, they were meeting to work on this, and so they had this press release saying that they're going to start the process to enhance name, image, and likeness opportunities, likeness. So this is not about getting paid for playing. It's not about getting paid from the school, but you want to get some sponsorship deals, sign some autographs. And nowhere did it say that we're definitely going to allow this to happen. We're just going to say, we're going to start working on this. We're going to start looking at rules. We're going to gather feedback. We're going to hope that they benefit. But we have all these rules to make sure that they stay within the college model and not within the professional model. So we're going to start the process, but we're not guaranteeing anything just yet.
I mean, so Jabari, just thinking through this, and I mean, first of all, it's a very quick response to what California had done to try to move forward and say, look, we want our athletes to be compensated for this, and kind of saying to the NCAA, look, it's your move.
Yeah.
What would be the significance, you think, if this ultimately does come to pass? Well,
it has to come to pass, because the NCAA cannot abide by all the laws that the states wanted. I mean, New York, as the senator here, he wanted 15% of all college sports revenue to be given to the student athletes. Florida has another set of laws. California has their laws. They can't keep on. The NCAA cannot abide by this law and that law. They had to do something. They have to do something. And credit to Gavin Newsom. He's the one that put this in place. And we obviously know once government interferes, there is no turning back. You have to abide by the law. They got 3 years to phase some stuff in. If they don't do it, then their revenues will start to get taken.
How much money could be at stake for these students?
Depends what they allow, because they could say, hey, you can benefit, but only up to $5,000. You can benefit, but only up to $10,000, because again, it says the first bullet point here is, sure, student athletes are treated similarly to non-athlete students unless a compelling reason exists to differentiate. So that's the first caveat in the press release that says we're going to start working on this. So there's already been tweets from people like Jay Billis already saying, look, don't get ahead of yourselves. Jay Billis has been noted for his sort of, I'm not going to get sucked into the NCAA, his stance. And he's saying, look, we're going to try to work on this, but if it doesn't really fit our needs, we might not do it.
And they might be trying to have it both ways, in other words, to look like they're moving
That's
forward
exactly
on something
what.
And if they play that game, it'll lead to their collapse. You cannot play around with government. You just can't. I mean, if they do, there's still a law in place. Gavin Newsom in California says, look, you got 3 years. Right. If you don't get it together by 3 years, we're coming to get it. New York is going to act the same way.
But you know who's got good lobbying? Colleges, because there's always a local representative who's got an affinity to a college. They've got a bigger lobbying power than professional teams, because a lot of these colleges are public run institutions, so they could, if they want to, say, hey, you know what, we're going to work on this, maybe give some kids 10 or 15 G's, back off on the laws. And maybe
it gets deeper than that also, because remember something, states can't allow these nice recruits to go off to all the other states who's going to be paying them money. Right now, California has the advantage. So if I'm an athlete, I'm saying, oh, California or Pennsylvania, I'll choose California because they're going to be paying me money.
That was the whole thing with the sports gambling, right? New Jersey did it, then the Supreme Court said, fine, New Jersey can do it. Then what happened? Oh, Pennsylvania and New York said, well, we need to do it too, because New Jersey's going to do it.
Money to be earned. Money to be earned.
So here's my question. If this train is headed down the tracks, what does it mean, for example, for the amateur status of Olympic athletes? I mean, does it raise those questions as well, or is this somehow kept
a lot of these Olympic sports, if you're an Olympic sport at a college, like, oh, you're on the rowing team or the tennis team, that's one thing. If you're just some random guy doing archery by yourself at home, nobody cares about you. You're not getting paid for that.
If I'm a swimmer or I'm an archer or anything, and somebody says, hey, I'll give you $500 if I'm a college student, I'm taking it. That means I don't have to eat ramen noodles that night. I can go out to a lot of pizza.
A lot of college swimmers have to decide, do I go pro or be amateur? Because you're usually your best swimming while you're in college. So someone like Katie Ledecky could have gone to Stanford, swam for Stanford, and gotten her Olympic endorsement. So there's an opportunity for people.
Katie Ledecky's fine, though. Her uncle is an owner.
But people like that. Yeah. Michael Phelps and Allison Felix, who went to USC, never ran
It's
for
more
USC.
it's not about those kids. It's about also the inner city kids. Those kids who are going to represent these schools who don't have anything. They don't come from anything. I come from North Philly. I know what it's like not to have. And so these schools, these kids that come from these inner city neighborhoods, they're going to benefit because now they can help their parents. They can help their mom or dad pay rent, living in the projects. They can now be a support for their family. And that's why I think this bill, California did it. This is great. And the NCAA better follow.
Unless they cap it at like 5 G's.
Right. Well, but even so, I'm sure they'd say, hey, that's more than we were working
better
with.
than nothing.
Yeah.
Absolutely.
Thanks, guys. Huge move.
Marijuana stocks lower across the board after disappointing results from Hexo, the company lowering flower prices as it deals with black market competition. Frank Holland joins us now with more. Frank.
Hey, Melissa and Kelly. Hexo reporting a 10% decline in the revenue it makes from recreational cannabis last quarter. That decline in Canadian cannabis pricing, it put a lot of pressure on the sector just as a new revenue stream opens up with the legalization of edible and drinkable cannabis in Canada this month. And one of the companies that will be selling those products is Canopy. It'll offer 30 different products when they're allowed to hit shelves mid-December. Today, the company offering a tasting of those products without THC at its headquarters up in Canada. In an exclusive interview, Canopy CEO Mark Zekelin says He expects consumables to really be a driver for attracting new customers. Canopy selling several brands of their edible and drinkable cannabis, including Tweed, that's a carbonated beverage. Also, Tokyo Smoke, a chocolate, again, both of them with cannabis.
We can produce a product that is precisely dosed to give you a reliable experience, an experience akin to beverage alcohol in the case of our cannabis beverages. And that really, I think is a major step to overcoming, one of the obstacles that consumers, face when they think about edibles and beverages.
In 2020, the Canadian cannabis market is expected to grow to $3.7 billion, doubling from this year. Consumables are forecasted to be just about 10% of that.
All right, Frank, appreciate it, sir.
Thank
Frank
you.
Holland. Up next, if you think the markets are scared of Elizabeth Warren, what would happen if Bernie Sanders got elected president? We'll hear from Senator Sanders on what his democratic socialism would mean for business. Stay with us.
The Bond Report is...
It's another Tuesday evening. Yet another cold day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and enjoy stunning white sand and crystal blue sea. Fly from London Gatwick to the Maldives with British Airways from £300 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
With the new Halifax Family Boost